ridiculous how much it loves to test it like that. But yeah, here we have another day where every single move has broken to a new high and stepped on the previous consolidations before. A couple other charts I want to check out. Yeah, this one, it has data for when we get back involved with 17,000, but not particularly much for now. Sorry, I had a chart that still getting used to remembering it. I've like, for some reason, I keep forgetting the ticker. That one. So this ended up doing the same thing again. And we did the exact same movement and resulted in the exact same push, and it did come straight back to this level right here as well. To the high of that range. Which, for some reason, looks a little weird. There we go. Gotta go back to the beginning real quick. Yeah,
News at 3.
pardon?
There's news at 3.
What news?
It's inflation expectations, existing home sales, and consumer sentiment. So
Yeah, it's strange that doesn't show up on here. Got 10 o'clock report. At 3 Eastern? Or, let me see. That's strange that they don't show up there.
Sorry, I meant 3-4 unit time. So in 11 minutes for you.
Okay. And that's for America? Could be
Yeah.
oh, interesting. Alright, let's see if there's some volatility. Let's see. Which chart? Smaller B points created on the short term, but still chopping. This is a B point right here, but it's very small. ATR is holding it at 10. I also want to take note of how much they pulled back on the people from here before getting back into the range. That's indicative right there. You know, everyone knows what that feels like. All of that volume in there, all of the people that had hope, all of the people that tried again, they just got that. Hopefully they survived, right? Best way to do it is keep your stop at the extreme, having taken off profit at the designated levels. Because if you drag your stop in there, look at how it's treated them. It's very, very tough. But not to say that you should be fighting from here. If you're in from yesterday, it's a better position undeniably. You can see exactly what you don't have to go through if you're literally long from yesterday, which is funny. But it is the case that it's not like it can't be fought for. And I said it will take less of a fight to get back to the high than before. Even with this report, I think. But anybody that's long from yesterday, undeniably, is safer with a hedge through the report than not. And any initial move off of that report, I think it will be met with pretty decent rebounds. So yeah, they're trying to cover the bases there. They're interested in the break of the yellow line, but they don't want people in for it. The 61 really speaks out too, which is that giant uh, node right here. It's like we want to make a left shoulder at it, you know? It's kind of ridiculous, but it is the case. So like a really bad version of this yet to come. So like this could be a test of the blue line from above. Okay? So it means don't or it means if you check your stops above the blue and white line, you could get stopped out. You know? And it's kind of doing that now, but I mean on a bigger picture. Now just acknowledge the yellow line, so. Now allowing the yellow line, it can even be a fake break to begin with. It doesn't have to be friendly break at all, especially given the environment. You know, they're interested in making sure nobody's in for that target. And you could see they pulled back on every pullback. You know, when the pullbacks have pullbacks, it's like you know they're trying. And definitely we got retracements on the short term, spikes, and then they were pulled back on, pulled back on, pulled back on, and then they pulled back on everyone. And all that remains was the wicks and spikes at the bottom, or those that kept their stops at it, interestingly enough. Because the B point now being hit, we're testing the blue and white line from above again, something that should be allowed, as I said. Now, it's a fake break of the yellow line, all of a sudden. Didn't retest properly at all, did it? Nope. It's a part of the playbook. Do it all the time. It's because it works. Most people are affected negatively by this movement, and it's it's crazy, to be honest, how it's like a mini agenda. It's like they're firing up the big machine right now, getting everyone out of the way, making sure that the skies are clear. Nobody's got a sell order where they want their sell orders because they want all of that liquidity. They don't want anybody to be able to sell there. That's for them. So that's an interesting way to look at it because I look at it like they're playing it against me, and you know it's like I don't let them get these things on me. They may have in the past, but no more. Because I'll tell you one thing, I didn't learn this by not being like, oh crap, it broke the trend line, after seeing it retest a million times properly, and then it does things like this. I'm like, you start to learn, right? It's like it starts to become part of the process. And with the almighty blue and white line seeming to get tested on every candle, I'm like, well, geez, God forbid we prevent that from testing. Because it's very aggressive. It's the center of attention, like I said, and it can continue to be even after we hit the POC, which is crazy. I mean, like, think about it. This entire move, I don't know if it's going to be an N, but it certainly could be. Hold on a second. How wouldn't it be, actually? If it made a right shoulder, an N is actually part of it. Like, think about it. Oh, sorry. Goes down, up, down, and up. It's an inverse N and an inverse N with a spike. Just stating the facts about the components here that we're dealing with, and given that it looks like this sometimes, is that no good? No, we've learned that this is acceptable. We can move this around, you know. We can move this around, you know. Like sometimes it's like this. And then I look at that, I'm like, what is it trying to tell me that it tried to do that? I'm like, that's terrible. If that's the case, but it did work, ironically. Funny enough. More trend breaks, more blue line. It's tough. The report is close. Minute and a half away. Any new trades that are made are directly exposed to the report. I don't think that that's a good idea as well. If you're making hedge trades, that's one thing, but you're reducing the risk of holding when you take a hedge trade. And hedge trades, you can aggressively drag your stops into profit prior to the report. Unlike the long trade, if you track your stops in a profit, you want to take the profits on the hedge trades because they're hedge trades. You don't want to get stopped out for a loss when you've had a profit. Unacceptable, right? So also, you don't have to have the whole stop in one. You can have it spread. It's been the case that even if you keep some at the extreme and you drag some up, yes, you retain some more profit. You could be interested in catching a better position for when you've sold off at a higher point. Like let's say for instance, if you've kept it at the low and you kept another one coming up and it gets stopped out, you could get that one back on this dip potentially. It's an option that you wouldn't otherwise have. It could be part of the playbook. Anyways, here's the report. Now that the upwards blast could be sucked right back too, so we got to be careful with that. Hedging it is on the table. But never use more than your core. Because at the end of the day, I want to make sure that that's a line right there that we're going to return back to. Could get really close to, but hey, anybody that was targeting the blue, or sorry, what was it? The POC, orders filled, 61% retracement. Beautiful. It just snapped right down to that blue line right there too, so got to be careful about those. I think we'll see it again in the future too. Call it the new blue and white line. But it doesn't have to be as friendly to it as it was down here, I'll tell you that right now. It's steeper and harder to test. As time goes on, it'll become easier. Another test of it though, if you did hedge it, you could take more profit. So the whole blast was taken back. If that was your goal, then you could profit off of that, knowing that if you're still holding from the bottom, like a hedge trade like that could cushion your ability to continue holding. Not to say that that's the best place to be positioned from or the most highly likely place to be safe from, but if it's what you have, it's what you have, and you can make the best of it by finding hedges for it and protecting it. Now this whole thing could look like a giant inverse head and shoulders. Don't forget that, right? Like it hasn't been given the time to do that, and if it wants to, I mean, it could even be a bigger one. Like what about this giant left head, giant right? It doesn't even have to be as big of a right shoulder as the left. We could do half the size. And we could do it at a different spot too. But that high is under serious pressure. Is it not true that everybody from the open has been bought out? It's interesting. All the initial uh, really aggressive short traders that wanted to be part of the next big dump, they're all back to the drawing board. Interesting. And I know there's been spikes out of there, but there's like an incredible trend that goes across these lows right here. This one really kind of fake breaking. The blue and white line. Wow. Still. You can see it just basically enforces, hey, this is the new center of attention now. This one, I think we're trying to like wean off of it, I guess, and get more onto this thing. But testing it from above could be on the table. Hey, wait a second. Just steal the POC up there like that. There's more volume here now than there was there. Okay, interesting. We'll work with it now. That's a big move though, eh? Like, oh yeah, just like all that volume. A lot of people must have got stopped out right there. Because I couldn't imagine people being interested in buying right here. The 61? I mean, you know what I could see? Is some people, like, I think that when you play this pattern, the best place to play it from is here. The next best place is here. This should never be attempted. I don't care what they say on the internet. Just to make it clear, you know what I mean? It's and you want to know what's funny is in that example, when you do this point, there is no indication that it is going to be a head and shoulders whatsoever. Just by making that move. Look at how the shoulders were uneven. What's up with that? Positioning was terrible. Doesn't mean it didn't work though, but this is when you can see the big players are pushing an agenda, and this is a different environment to what everyone's used to, or to what everyone came out of. We all came out of a different environment that wasn't doing this, wasn't making inverse head and shoulders at the high and going higher. Because they're meant to reverse lows. So, center of attention definitely trying to raise itself a bit. And this pot could be made the middle quite easily. Blue and white line continues to get tested. On a move that broke this trend though. Still fake breaking this other one. Definitely an intriguing environment. One that puts people in a tough spot that fight for the middle environment here. Definitely. How many times have we crossed through what looks like the middle? And I mean, even when they made a middle of this move right here, whoops, this move right here. Like, look at what they did to those people. How many times have we went through that line? It's like we'll just come back to hit them just because it wants to make them uncomfortable almost. And I noticed that, we don't have to be in from there to be able to see that it's definitely, I don't, it doesn't matter if you're long or short from there. Remember, the people from the open were first like, oh yay, it's going down, but then what happened to them? They're still holding. It's really tough. For what it went down, it went up. And the same thing goes with hedges. If you do take a hedge, I mean, the goal is to take off enough profit so that you can keep some of your stop at the extreme. The other part, you can drag down. This supporting blue line, I'm going to make it darker blue because it's older. And it does make B points up here now. It's got B points here that haven't been tested properly, you could say. And here, even though they are small. This line really loses its impact, and perhaps this one here could gain some. Good for retesting, basically. But emphasis on the old downtrend that fake braked. And we made it to a 61, but made it through the 61 on the downside. Let's see where it was and exactly if it wants to return to it from the underside. Oh, it's the B point. Interesting. Well, looks like we will. And then I'm like, okay, well, that 61 didn't work out very well. Currently, we haven't really broken the trend, so we can't apply a fib set on it. Can apply a downtrend, an unbroken one. Plenty of space to get to it, of course. Grinding the low that it made at the open, basically. This level is still marked as an interesting level because it marks almost like the tip of the triangle. It's like if you draw a triangle on this, we've almost got like the tip of the triangle going on there in a weird way. And it's also a 61 variant. back to the 61 from before. This was like, okay, when you go from the bottom to the top, this is the 61 that it failed to really care about. Paid the price though by coming back to it. And it's like, I just want to, mark that down as the first time that it's done that today, right? Because it blew through a level that was otherwise, supposed to be, you know, worth something, and it didn't make it worth anything. It costed the people that tried it, right? So after all, it came right back to that level and through it now to get to the other B point, perhaps. I mean, I've seen lately we've missed the second one a couple times, but we end up getting it ultimately. Because there's been two B points a lot on the upside. I've noticed. Like yesterday there was kind of there's two big ones in here too. I mean, what about that one? I know it's been hit already, but making it through it's been a problem. So many people have been hindering its ability to get through there. A lot of people have been trying to take profit there, I bet. A bunch of sell orders there. Wearing it down perhaps. But this is the second B point. This one here, I know it's already been hit. Sometimes I just make them blue because they've been hit already. And ironically, everything comes back to this medium point level where I am intrigued now that we've broken the short-term downtrend as to how much we've come back into the last trend to get to the B points, and it's not even halfway at all. And it gives me that heavy triangle vibe where it's like, yeah, basically we just wanted to do this, and I'm like, okay then, that's fine. This is common. I mean, I don't want to scroll out and point out how many times it's done this, but take my word, it's done it a lot. And we'll see it again. You can count on it. And you want to know what's funny is the market goes through phases of doing both sides. It won't be like this for long. Soon, it will change up its methods and it will test the triangles differently because people will get the picture. Because think about it. Anybody that's exposed, right, from the inside of this triangle, like it doesn't matter where you're in from, right? It's like how comfortable have they made it? Well, anybody that's tried to short has been knocked out on this pop. Unless they were shorting back to the triangle, or unless they were shorting back to the blue and white line, like on the report when I mentioned, back to the blue and white line, if you kept your stop at the extreme, you're still in and waiting to get stopped out so your long can continue. Because if you kept your stop at the extreme there, then you're still in. If you're in from yesterday, then you're still in. So I mean, like, under the instruction, what thing was out of line? I mean, to trade back to the blue and white line was the best thing to do on the report, to assume that the whole report was going to come back to the beginning. If you've taken profit off at that point, that's fine. If you let some run, well, that could be the new high. That's fine if it knocks out this low. At the end of the day, the the lows are what I think are worth keeping still, ironically. The agenda I don't think is even finished. 17,000's being quote unquote dealt with. Oh, what's interesting about this as well is this area, it did spend making on the other side. It just didn't work, which is interesting. But it doesn't mean the people from the head were stopped out. If you kept your stop at the extreme, or if you bought on any other time and still kept your stop at the extreme, it doesn't even matter. You're still in. Because it's true that your position is defined by your stop, not your average price. Now, like I said, your average price could be here, right? But if you've taken off 1, 2, 3, 4, 5 contracts and you've only got one left, I mean, your average price can be here all day and you can put your stop here. You know that you're going to have profit if it gets hit still. And you've got your stop as good as anybody that caught the low, right? And you know that if it gets hit, that last contract, as you get more familiar with this, it doesn't always have to be one that you're leaving, but you know that that last contract, even if it gets stopped at the low, you still have 47 points locked in because you took 5 off. It's just an example. And like I say to do 3 in, um, you know, the three trade trifecta, where basically, you have a portion for every single one of you have a portion of the trifecta for every single purpose of each contract. So every portion has a purpose. The first portion and its purpose is to take profit on the ignition candle. So when it first breaks the trend and offers that first amount of profit, that offers you to take some off and protect the interests of the remaining two portions. So that when your stop gets hit, it's not a complete loss. You've taken off some profit on the ignition candle to secure your stop. The next portion for your profit target. We get the profit target, obviously the green dashed lines, and the other profit target. So maybe a blue dash line. If I say it's a profit target, then it's a profit target. So we do that. And then we've got the exposure beyond the profit target. So this is what you end up hedging at the end of the day. And this is your 3 trade trifecta. Sometimes you can maneuver the movement or the patterns around to say, it's a really risky environment. There's a good chance you'll be trying 11 times. You don't have to hold the exposure contract every time. Let's say you go in and you take 2 off. So you go 1 in and you take 2 off to secure even more profit. And you do this multiple times um, throughout the process, where basically towards the end of the 11 low zone, you change it up and start holding one because you expect it to continue. And the beginning of the consolidation, you could be a little bit more aggressive with profit taking. Basically, that's a good way to go about it. And I'm like, yeah, sure, 61 here. It got crushed, right? POC's crushed, right? Now, what about the big 61? Because it's under attack heavy. And we're also going to be looking at maybe making a head and shoulders to an inverse. If it does that, it's okay. So no stops are dragged into this range if you want to keep your position really. Like if you consider this right here a range, look at how much we spiked out of the top and bottom.
Hey, morning, man.
Hey, morning. Oh man, I got something to show you. When we let's see, what is the ticker? This chart we were looking at that you put your channel on.
Channels.
Yeah, man.
Nice.
That
Oh, baby.
that's been used like absolutely extraordinarily. It had this N and it went up and it did that same thing after the N as well on top of it. Now we came back down today to test that high. At some point I think we'll see this medium bar again. That's going to be a heavy duty level, I think. But the agenda continues. And VWAP's all the way down there with the VWAP band up there. That's interesting. We're so far above that VWAP band now, it's crazy.
Well, it looks like on the hourly we're at it like 161.
On the hourly.
Yeah.
NDQM. There we go. From this one.
Yep.
Hmm. So up here, this level is an intriguing level. Could take some time to grind to it. The 100 extension. So what that means is that this move could very well have this coming out of this side. And what that measures is the exact distance of this move having come out of this move. Basically. Again, the people of the tip of the triangle getting overlapped. The blue and white line got crossed again. The 61 got attacked, didn't make it through it. But what it does looks like it leads to is another 61. Like, we just had a 61 to a 61. And it's back to this trend line for a retest as well. Where the tip of the triangle is undoubtedly finished. Where the spikes out of both sides, even on the short term, have matched, basically. Not in size, but speed, perhaps. And you know what's crazy? Is it did do the head and shoulders to inverse head and shoulders I was talking about. It literally made that move. Like, my point was a minute ago is that it made a high with a higher high and a lower high. A low with a lower low and a higher low. This pattern is an inverse head and shoulders coming out of the top right there. Like if I was to just show this, you'd think, oh geez, it's coming down into an inverse head and shoulders. But then if I show this, it's like, oh, that's definitely the top of a head and shoulders, right? There's no inverse head and shoulders in sight. But there is on the other side of the spectrum. And it's the last thing to happen. Is the bullish pattern the first thing or the last thing to happen? So the bearish pattern is the one that has 3 highs and it happened first. So it sent it down and it became a bullish pattern with the 3 lows. I call it an all-in-one. Just like I was saying, hey, we could have like an M that turns into a W. It's an all-in-one because it has an M and a W in one, right? And then we've got the head and shoulders to inverse head and shoulders. Beautiful. Along a consolidation. And it can work like this. Starts with high, higher high, lower high, and then low, lower low, higher low. This is what the market chooses to make. We either accept it or neglect it, right? Understand it, or we don't. And I'm like, well, this is something we've seen a lot, and it's not very common, but if you watch it every day, you'll see it a lot. Like, I mean, it's not as much as M's and W's and stuff like that. Like, we're not getting what we did the other day, where it's like, oh, imagine a rising wedge, right? Designed to go down, blows through the top, right? And then we make a falling wedge, designed to go up, and it falls down. And it's like, this is how we make an S-wave today, ladies and gentlemen. Isn't it nice? I'm like, wow, that's cruel. I'm like, two patterns that are effectively targeting like new traders and people that want to make it easy for themselves. Just here's a pattern. Oh, it's forming. Let's try to make it work for ourselves, like Google says. And then you try it, and it blows up in your face. It's like, oh, geez, is this pattern even good then? Mustn't be a good one. And then it works the next day, and you're like, damn. And you see it working, and I'm like, well, it's like what's funny is it'll show you that it worked at like 2 o'clock in the morning when everyone's asleep, and then everyone tries it, and it's like no good. It's like, oh, everybody, look at how the confinement area between two highs like that, it breaks without even retest. It's like so effective. You see how a 5-wave move works, and it's like absolutely effective. And then people from the day try it. It's like, all right, now you guys try it. 1, 2, 3, 4, 5. I'm like, what? But it just happened right here, and it was almost the same thing. And now the American public wakes up and look at what they get. Interesting. I'm like, why? I don't do this, I swear.
When all the people
I'm like, oh geez, now they're here. Everybody, make sure the patterns fail. Oh my god, it's true though. And I prove it every day like
middle
that.
of the night when there's nobody in the markets, it's like, all right, we'll play the patterns out nicely.
Yeah, they'll be able to look at this in retrospect and see how well they work. They'll be able to reference the cheat sheet on Google and say, oh, these head and shoulders patterns do really work. Look at how they captured the highs. Because the first thing people will do is look at the highs and the lows, and then you'll see, oh, the low was an inverse head and shoulders. The high was a head and shoulders. Does it? 945 fails, and like destroys everybody. I'm like, why? Market's just ridiculous nowadays. Didn't do this in like 2020 or like 2020. Didn't do it. It wasn't like part of it. 2023 was a turning point. I would say where it really was like it was aggressively going after people. It's like I don't know if there was a certain level of control that was obtained on Wall Street or something, but the agenda gets pushed and nobody stands in the way. They will annihilate everybody until it's finished with absolute precision and with absolute technical analysis. Like, is it not true that the inverse head and shoulders is now threatening the head and shoulders again, and that it is the wicks and spikes that should have been kept and held and fought for, even though they were difficult? I'm like, yeah, sure. If you're holding from yesterday, it's quite the show, right? Doesn't mean we can't learn from this if you're not like getting involved with it. If you're already long, you don't want to ruin your average price on that account anyways. So why would you buy more up here? At the end of the day, um, it's acceptable for side accounts and such like that, but you can't expect that longevity will be on the table, really. Aggressive hedging is acceptable. There's been some very quite decent jabs against anybody that's tried to go long today, and they've made sure that most of the people are struggling with it. And if you've kept your stop at the first low, at the first extreme, like you didn't have to go through any of that, It's interesting. If you targeted the blue and white line to begin with, when it was never tested, if you knew that the entire report was complete or the open move was complete BS, when it opened, what I said is that they were trying to get everybody to short it. All the aggressive traders like piled in thinking they were missing the next all-time high. Or missing the next all-time, like basically catching it. They thought that they were going to catch it and miss the next big dump, and they all piled in short. And look what happened to them. And then they tried again here, and I'm like, well, it's tough unless you were trading on the report, expecting it to go to where the blue and white line, where I created it. The first test of it ever being hit was on that report. That is the first time it ever hit that line. And if that was your goal, I created it here when we got on top of it so we could get back to it. And that was the deal when we were on there. At the end of the day, after saying that, I did mention that the entire report would come back to where it began from, and it did do that. It was no horseshoe this time, though. More like a spike. They wanted to get that over with. It was a quick slap on the wrist for the people that thought that the report's initial move was the way it was going to move. Because, ironically, the first initial move was like, hey, everybody, the report's great. It's going up. And I was like, no, no, no. Garbage. Ironically, I do think that it will go through that point at one point. It's not invincible, but I just don't think it's because of the people associated with the report that we're going to get through the high. Now, when people look back and they see the bullish report, they'll think that the upwards move to the high was because of the report. Foolish, I say. But that's what people are built like. They do that. And we will see it. You'll see articles posted about how the report freaking like, half an hour ago is going to make the run. I say no, that's ridiculous. I say anybody that tried to buy on that report was absolutely slaughtered. Like what it gave up, it made sure to give down right after. Like the whole thing, maybe even a bit more. Like this was the report right here, right? And like it was harsh. It wasn't nice about it. And I'm like, this triangle here, it's trying to be more of a triangle, but we have got two confinement areas. The low of the range and the high of the range. Obviously, this is in a node where many moves have started and ended at the POC and at the blue and white line. The blue and white line, like I said at the beginning of it, I'm like, well, if anybody obstructs that line from getting hit, until we're basically out of this node here, it's tough. I don't even care if it's the first move out of the node. The first move out of the node's probably going to be interested in coming back to the nodes. So it's like let's get above the node, beyond the node, step on the node, step beyond the node, then you can worry about that. But until then it's unsafe, and it's proven the fact that it is unsafe. I'm like, what? Do you think the next particular time is going to be the perfect time to make sure that you can drag your stop within the path of these levels? I wouldn't test it. I wouldn't test it. That's the funny part about it. It's like I'm not gonna even try, like it's been a great target for any short-term scalpers. I'll tell you that for sure. Anybody that's targeted the POC since I said it was going to be the new center of attention, or anybody that's still targeted the blue and white line, they've all been hit so many times. Now I think we're closer to the end of that than the beginning. Now, assuming that we're going to test those lines more and more and more, we could test them a few more times, but we're not going to test them as many times as we have. And at some point, we're gonna leap away from those lines and double this entire node. So that's that's what I'm going on. The end of the day, if you have a hedge from the high and a core from the low, you're waiting. If you touch either position, you lose. Do you see how that works? Like, you have position from the high and the low. If you do, that's the best way you could position yourself from today. If you're still holding from yesterday, then you're worried about catching highs so that you can protect your interests from yesterday or the day before or any other day that you're holding long. If you're part of the agenda, like I said, and it's like these people, they're are they done? You think they're done? No, 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 no. They're not done. We just got to 17,000. Do you think their objective is to get through it? Oh yeah, they just don't want you in it. So don't let them fight you out, because you see what the fights are like. They're tough. Yes, this one has been, an hour. It's nothing like what it has been the past few days though. It's nothing. They let you keep the low and everything. One trade at the beginning of the day, back to that blue and white line is all it took to be in for this. And if you took any other trade back to that blue and white line, you could afford enough profit to keep your stop at the low. Why not, right? Like let me do a visual example. Let's say for instance you caught this low back to the blue and white line. Could you not take off enough profit just like these people to keep your stop here? Or are you limited to just having it here because you're in from there? Well, that's not as safe, clearly, because look, they got stopped out, right? Market respected this low, not that one. Doesn't matter if you're in from there. You could put your stop at the bottom, just like everyone else. If you caught this low, could you put your stop at the bottom with enough profit here? Oh yeah, you could. Why wouldn't you? Do you want to be in for the next 94% retracement, or do you want to be in until the end of this low? Like if this low is not right, well then fine. But you know what's funny? There's no better place for today than to be in from there, which is crazy. The market did that to all the people that had the best price. You see how many times it pulled back on them, and then it pulled back on the pullbacks. Not very fair, not very fun, not very fair. But this is the way the market chooses it to be. And I'm like, if we know it's going to be that way, so much easier to endure than having it just be like, oh my God, like $1,000 to 100, 1,000 to 100, 1,000 to 100. And it's like, will you see 1,000 again? And it's like, now you're given 1,000. It's like, oh, geez, I don't want to go through this emotional roller coaster. I'll just take the 1,000. Then it turns into 3,000, 4,000, 5,000. You should have held it. The only thing that's different is the willpower, like the ability that we have, like to retain, to complete the strategy, to focus on the target. And after you've hit a few targets, you know what it's like to get there. So you're not going to stop until you get there. Because if you fought this hard and you've been paid a little bit, I mean, you're undercutting your work, right? You want to be paid for your work. And if you worked hard yesterday, you don't have to work for today. Ironically, you don't have to do anything. You just have to wait. If you caught the high, then you have to wait for it to get knocked out. So if it's going to get knocked out, taking off enough profit is really important to make sure you've paid yourself for this dump. And I'm like, okay, does it matter that we spend another half an hour here if we want to? No, no, no. But like we're gonna have to deal with the fact this consolidation will end. Okay, the extremes will be broken today. It's very likely, and must. I think it's inevitable, but it's my opinion. I suppose I can't prove it. But after all, positioning yourself from inside of the node has been not the way to go. The extremes, though, have been the points of value, and if you still have them, then we wait until they get knocked out to find new ones. And I'm interested in finding the high, but I don't think it's going to be the one that we have. Pick your battles, right? Sometimes you know what the ones that are just literally meant to get people are going to look like. And we can see that there's some in the morning, like that dump, that was a trap. Tell me how it wasn't a trap, right? It's like the big dump. It starts out at the open. Imagine you have a long position from the day before. It's up, and you see a big dump like that. It's like, oh shit, you take the profit. You see the profit disappearing. They take it, and now we're back at the point that it dumped from. Shouldn't have taken it, I guess. So, it's like a trap. It's not only a trap for the people that were long yesterday, but it's a trap for the people that didn't have a position at the beginning. They're like, "Oh, it's dumping. I'm missing it. Better take a short trade." If they tried that strategy, it amounted to you better have taken profit or it's a loss now. And I'm like, "Geez, that's tough." But it's good to understand their experiences, even if you're not part of them. I think it's a product of being, I think, in a lot of difficult situations that you can see when other people are going through them. And it doesn't only have to be in trading. It's empathy, I guess you can say. And I think it's interesting because I feel it for the people getting annihilated in these stupid ranges because they don't see that it's clear. And I'm like, oh my goodness, only if they could see that their stops are getting attacked and and that they're falling for these traps in the morning every day. And they change. The traps aren't the same. Like, we will see them change the traps. And they do. Of course they do. If you didn't think they would change the traps, they wouldn't be very good at it, would they? Of course they have to change them. Look at this go. Anybody that fought for the long is undeniably able to take profit on the spike. They're at the edge of the node. Getting on top of that blue and white line is something of an interest to me. I'm like, well, that's what I call that's a cheeky move, really, if you think about it. If it manages to do it, there's no way it doesn't come back to it. So that's why I like the idea of trying. And the more it gets above it, the more profit it is to return back to it. And it can do it multiple times. It's asking a bit much of it too. So it's got to be. And I'm like, if we break it above this level, this point can become a B point, right? To a big W, right? If it tries that, that's interesting. A lot of B points have been getting cut off at this point, so it's very much why I say to take profit there. And if you still have a hedge, then you're still in, but it's getting threatened for sure. And I mean, in order to threaten that hedge, the blue and white line looks like it's going to have to be in the picture. And I'm like, well, unless that hedge is meant to hold, the blue and white line isn't. Time could change things, sure. And I'm like, all right, whatever. If it takes time, then what changes? It's a fact that this line gets higher as time goes on. It means that if we took time, we could stop these people out and still be under the blue and white line. But that's no fun though, honestly. I think that the incredible forces behind yesterday's move are itching to get things going again. This is like a test of the waters to see how many people are going to be associated with the exit of the node. The hedge still remains in play. I think it's important to have one if you are long from yesterday. Because like every single day in, day out from now on out, it's going to be to find and maintain a hedge to protect the core. And I mean, like, it doesn't have to be that way. Like if like that's just the best way to do it. And it's hard and it takes time, it takes effort, and it takes much management, but you make a lot of money doing it. And it is totally worth finding the security of the hedge and having exposure at no risk is a huge attraction to Wall Street. And if you can keep your exposure from to the upside and the downside and still be in for long-term profits as well as capture the short-term ones, oof, no better way to do it. So if you make it a habit, I call it the habit of hedging, because you're not going to just do it. It's not humane to do it. You don't just wake up and think, this strategy I've thought of, I'm going to start implementing, I'm going to go long and then trade against it instead of selling when I'm at a profit. I mean, like, it's just inhumane. People will not do that. But why is it that hedge funds name themselves after it? They've got all the money. Really, really attractive strategies, them. And it's like, they're not just sell funds or anything like that. Profit funds, they're hedge funds. And what is hedging? It is to trade against your position to reduce the risk. You open up a trade against your existing exposure to benefit off of the decline instead of selling to buy back. Like, think about it. If you know you've got the best price right here, and you know that at this point it's going to come back, but no more than there, you know that this is not as good of a price as here. Like, you don't want to give this up for just this stupid little move, right? If you knew that was going to happen. Well, what about finding, like, it's like, okay, all right, can I trade another security that tracks the same movement and actually take profit on this move? Because I know I don't want to give this up because it's going to do that in the future. But if I know so clearly that this is going to happen, can I take part in it? Well, maybe if I have 10 down here, I can just start with 1. Oh, that worked out really well. I managed to take profit there. Maybe next time I can take 2. I say you want to work your way up to 5. If you've got 1 NQ, 5 MNQ against it's the best way to go. And it's not always one size fits all, but with that being said, if you use half your position size, so if you've got a whole one here, and then if you trade with a half position size, like half of this going against, that means that in the event that you're wrong and it goes up, the other half is still making you half the amount of money. So like, let's say for instance, if you were making $100 a share all the way up to there, right? At this point that you've hedged, you only make $50 a share beyond that point, but you still make $50 a share even though you've caught a position and it's losing money. It's only losing half the money. So don't you see how that's an advantage? You can see how the 1NQ, if you trade against it, you're still making the value of 10. If you trade against it with 2 or 5, you could lose 5 times on 2. Trying to rack up small profits trading 2 MNQ. You could rack up hundreds of dollars trading 2 MNQ. Do you know that if you traded 3 MNQ against your NQ, that you have to lose 3 times and you're still up by 1 contract? You know, it's like you've been holding one MNQ the whole time. Let's say you've shorted 3 times and lost money, shorted 3 times, lost money, shorted 3 times and lost money. You're still going up by one contract. You're still up on this, where you've literally been destroyed trading 3 contracts against it every time. And if you make money on them, that goes straight to the bank. But if you lose, you know what's funny? You can just close this whole thing and say, you know what, I suck at this today. I'm gonna just start again somewhere else and close the whole thing. And what you will have made is one MNQ the whole time, the whole way up. First, this three starts to get crushed. This three gets crushed. This three gets crushed. If you close the whole thing because you've failed on every time you've hedged it, you're still up on the entire endeavor. And you know who's got to try to short 3 times with 3 contracts each time? And I'm like, geez, nobody's using that, and it's incredibly effective. And I'm like, well, at the end of the day, you can start on a practice account. I suggest highly that, if you're not familiar with the concept, it's not going to come overnight, but I try to develop these kind of eureka situations with people in hedging because, I'll explain it differently every single day, but it's not meant to be something that you learn overnight. The blue and white line is also getting attacked heavily. It's kind of complicated. I don't mean to drop all that on everyone at the beginning of the day, kind of, but it's really important to me, and that was a really interesting way to explain it. So I hope it helped. At the end of the day, I'll do it differently tomorrow. Blue and white line definitely try to get tested there. I think its presence is relevant. And when I see it respond like that to that line, it did take the time to go just slightly higher than that level.
like a potential D-leg here.
To a bigger W? To a bigger W?
Yeah, the bigger one.
See, I like the slow approach, you know. It means a lot of people aren't going to be trying to chase. A lot of people aren't really excited about it. When we get to the high, we can go faster. Most people will not assume this because when we get to the high, more people will short it and then they'll put their stops at the extreme. We will knock them out, all of them. I don't care how much time it takes, but if that's what it wants to spend its time doing, well, it's not going to take long, I don't think. The people behind the market, the agenda, right? You know, they're pretty aggressive. Look at them go. It's like they're listening. Look at them test the blue and white line from above. This gives me deja vu to the move that we were talking about super yesterday. At the end of the day, where it basically spiked out of the top of that blue and white line and came right back to it, like in a millisecond. But really intriguing moves. Common though. This must be the way it's done for now. I mean, and it's crazy because it had the audacity to get on top of an already steep blue and white line. One that I would suspect, if you just look at how that trend's drawn, you think most people will draw that trend in? I don't think so. It cuts through the top of the report. The report's the center of attention for most people. They think that all the moves that we have right now are about that report. When everybody looks back in retrospect and they say, oh, why did that move happen? They'll look and they'll see the report and they'll be like, oh, it must have been that. I'm like, that thought process though, killing me, killing me. It's like you're being told what they want you to believe, so you stop looking. And as soon as you're told that the report was the reason, you stop looking. And I'm like, that's human. I mean, like, it must be right. Google said it, right? Terrible. So I'm like, my angle is like, we got to be better than that. We got to be, you know, more. We got to have a more open mind than that, than just understanding that the news is the way. Because I don't read the news at all, zero. I just read the chart. That's all you need. The results of where the money has moved, what the people are doing, what has happened to them if they've tried certain things. Not a candle goes by where I haven't watched it. So that's an advantage, I think. These spikes we see here have been used before on the other sides of these triangles. And they're out of the top of this range. So like sitting on top of that node. We made them out of the bottom of this one too. I find it interesting when it does that. Do you notice that across the other side of the consolidation, we get a very strong move on either side? An interesting perspective. It's crazy how we can look at it for so long and see then that is the case. This also is very suspiciously particular to me because it has like a range here, but it starts with these two moves on either side of it. Very much like when we started that move right there. It was the first move that it had to make that range, and then it stayed within the confines ever since. B points hit. Um, hmm. So it'll be the first that we haven't done a 61. You know what's weird about the 61 is it's close to the blue and white line. So I'm like, blue and white line, if it wants to get tested again, it would be at the 61. Like that. It's like, subconsciously, people have seen this before. I'm not. Or is it not the same size in the same confinement area? It does not have to work the same way. I'll tell you that right now. Intriguing though, that is the same confinement area that starts at the same baseline and everything. I'm like, well, suspiciously particular. And what the people do every day is try to look at what happened in the past and try and make it work for them. And I mean, like, it seems to be within human nature that they do that. And like I was explaining with the 5-wave move in the morning, it's like 1, 2, 3, 4, 5. I mean, why didn't it work out for the people that tried it at the open? Instead, it nearly doubled the entire pattern down before reversing. How could they survive that? If their goals, I mean, like, and they did this, how? It's cruel. Like I said, it's very, very terrible, really. And I'm like, what's funny is like they just showed kind of like a smaller version of it being able to go 1, 2, 3, 4, 5, work out really well. This one got even better at doing it. Now you try. It's like, oh geez. And I'm like, it's good to see it like that because it's like, but like I cannot have anybody forgetting the impact of what these people had to go through in the morning, whether you were a part of it or not, right? Because we just overlook moves like that, and we can see the result of it was to make that like really harsh jab down, and then that slow grind up, and it took the whole thing away, like that, basically. Not the whole thing, but 94% of it. Which is like, we know where that came from. That definitely is an aggressive move that we've seen many times before at times of interest, even on the short term. Like, I can use this small move as an example. The idea that, it started out for the people that caught the very low with the ability to endure a retracement like this. And it wasn't that nice either. It had a small one to begin with and then two more, right? Kind of making like a head and shoulders that failed in a weird way. If they couldn't handle that, then if anybody caught that low, then they came back for them and came back for the people that caught that low. And if anybody chased along the way up here, they came back for all of them. Even if they thought they were getting another 95% retracement like they did before and caught that low, they made sure they were out. They spent time on that, making sure that everybody was out of the way before they made the move like this out of the market. Notice that it is like 2 humps and a pump. Interesting. Just gonna point that out. It's very much a thing that, I mean, I don't know what else I could call it that makes more sense than that. Actually, I was thinking about something. Yeah, I was thinking about something. I was thinking of calling it the camel pattern, actually. 2 humps, and then it goes like that. Yeah, something like that. Very much so. Might do that. Make a video on it. That's probably more appropriate. But I want it to be memorable. That's the thing. The lack of appropriateness, it makes it memorable, and it describes it. Like a camel doesn't describe it as much, although camel does have 2 humps, and its head goes above them. But I'll think about it more. At the end of the day, what matters is that it's going to change because people will start to get used to it. It's going to change soon, and we won't see it for a while work again. What we will see is work it in reverse. Now notice that this is not doing what it did before. It still continues to benefit the people that are long. You see how much of a fake break that was? Like, I mean, under no circumstances was it supposed to work out like this. It doesn't mean it can't in the future, though. I find that the people that were associated with its failure will be given a chance to break even. The market will do that for them. But that's it. And it could look like a right shoulder. Why not? At the end of the day, the major name of the game was to keep the core. If you found a hedge, it's on the verge of being knocked out. If you kept your stop at the extreme, there's no place you could have kept it higher than that that would make more sense. Now, returning back to the blue and white line from above is definitely on the table, as we know. But do you see how a small spike out of the top of this range happened after a small spike out of the bottom of the range? And it did that, here as well, Like, let me take this away for a second. This is what we're working with here. And I'm like, I don't get to determine how many more targets the market will provide today, but that blue and white line I do believe will be seen again. Now, the highs that we're at right now are pretty uh, substantial, and I think that if they're turned into B points, we could see some intriguing fibs used. But in order to, use those fibs, we have to get above that high. And of course, there will be fibs on this B point here. What if it's like this on the short term? Like, we did step on top of that bar before. The objective was to double the bar and return to it, double the bar and return to it. That was the whole purpose of everything we ever did here. Like, we took every movement that we did below it and we put it on top of it like that. Look, that's crazy. And at the end of the day, look at how 1, 2, 3, 4, 5 ended up going sideways and only coming back to the fourth wave as well. Interesting fact of the matter. And we did that again here. 1, 2, 3, 4, and 5, and it didn't come back. Yeah, didn't come back past that fourth wave. That's a characteristic that we've seen in the past, and we're rivaling that 200 again on the longer term. Where it is true that up here, like another 100 points, we get to the 261 and the 200 and 188. Now that's just below this point right here. So there are definitely interesting levels where I do believe that we could get some short-term hedges off of them. Now these highs that we're just passing right now, they're definitely going to be want to be tested again as well. Continues through the high. The name of the game today was to be long and to fight for the long and to keep the long, and if you kept the long at the low, then you expected the hedges to get knocked out. and that's why taking profit on them was necessary. You know, it's really interesting. There's no better way to do it than that way, though. If you focus on hedging when the report came up, then you made money on it, but it didn't knock your core out, and that's the interesting part about it. Oh yeah, this chart, I need to get off that one. Yeah, this one. And of course, what it means is if you drag your stop above the blue and white line, it's subject to getting knocked out at any given time. Of course, at this high as well, like these highs become B points, and I don't think they can be tested anywhere remotely close to, like they can't be considered tested. Like when they get hit now, these levels here, they don't go with this B point. The ones that go with this P point are these levels. I'll draw them in. Like this. And I'm like, well, if I take the other ones off, we get we get some levels up here that are really
We
intriguing.
just hit the bottom of a green zone that I have that it actually just came from about 1,000 points down.
Really interesting. Yeah, because as of now, we've tested the 127 of this short-term fib,
Here you
which,
go. I posted my chart for you there, Joe.
yeah, let's take a look.
I was using the volume profile on the later time frames. I'd say a little while ago, like whenever we were near the bottom, we were lifting off, and then I encompassed that whole move down there, and I found a gap roughly of the same size.
This here.
Yeah, the green zones there.
Mm-hmm.
And we just hit the bottom of the top green zone. It's 1,000 points.
Nice.
I try to find equal zones to each other because then, once we make it there, we may do something similar to what we did in the last zone, like a similar spike of some sort.
Mm-hmm.
For Canadians, what platform is best used for like options contracts?
Question.
Oh, just Questrade. Okay.
Yeah, why not?
I don't know. Don't think I've thought about it on Questrade. I have a Questrade, but
Yeah, you'll have to get
it's
their
not for.
options. It's separate.
Gotcha. I was
Yeah.
just thinking for like more like long-term plays, a couple months out, just on like I don't know too much about options all that much right now, so I'm just kind of starting to read up on it to kind of
Yeah, I wouldn't.
add to this.
It's I'm cringing hard. I don't recommend options. Not what I recommend. I don't even want them talked about in the group, really, to be honest.
Okay.
I think it's a trap for people trying to get an opportunity out of it, but it's not good. It's a trap.
I mean,
It's not what big money
I've
trades.
traded options before, but
Yeah,
I just think
it's a
I
nightmare.
just like to look them up and see what they're kind of about. But I don't have any platform that trades them anyway. So
Yeah. Yeah, I traded them for years. It's far easier just to trade futures. More straightforward. Even shares, like I miss the trading shares days. But the market provides so much on futures, so much less risk, so much more liquidity, so much more time, so much less restrictions, so much.
You need a lot more money to buy into the actual stocks as well, right?
Exactly. Even with the margin rates and so on, and the more margin you get, the dodgier it gets. And
I'm not a huge fan of margin.
yeah, well, the thing about options contracts is like there's so many things that can go wrong, even if you are right on the trade. Like,
Oh,
like,
I know. I'm like reading a little bit, and I'm like, oh my, like
it's
reading up
crazy.
on futures is one thing, but reading up on options, I'm like, there's all these other terms that I haven't even touched on. You know what I mean? And
Yeah,
so many ways you can open up a contract. I'm just like, holy fuck.
yeah. Selling options is a different story, but it takes a lot of money if you ever need to buy the shares. So it's kind of complicated, but selling
Okay.
options is a way of like creating some sort of residual income off of selling the options. People pay a fee for them, and you collect that fee. And
Oh, interesting.
mhm.
So it's not even about making the trade; it's about collecting the fees at that point.
Yeah, like you do make money as well. There's multiple different ways that you can make money on selling options. Like there's so many different kinds of strategies that you can use in trading options, and I kept it pretty simple, but what I like to do is I like to trade earnings, and I like to get a call and a put on an earnings expectation that I knew was going to be really volatile, and basically the call would either explode to over 100%, the other one would lose 100%, and one of them would go up over 100% and be like
So you're collecting
500%.
fees on the other one.
Well, no, no, no.
No?
I
Oh,
wouldn't collect any fees on it. I would pay the fees to trade the options, but basically you pay a small fee to the more you pay, the more time you get with the option basically. So if you want time, you pay for it, and better move to where you're going before it's before you say it will. And that's how you make money basically trading them. But if it takes too much time to get to where you're going or moves in the opposite direction, the entire value of every single penny that you put into that position goes to zero. It's not like you just get out with a stop. It's not that kind of ball game because it comes to the situation when it comes down to like this $600 option that you've bought is now $20. Are you going to sell it? Well, why would if you, then there's no chance you'll ever make your money back. You can't lose more than that $20, so you may as well keep it. And it's just
okay.
becomes situations like that. I've watched people take options trades and they've just instantly become losses. And there's some cases where, let's say you buy an options trade and it blows up and it goes really, 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 really well and it's going through the sky up 5,000%. It's worth like $70,000. Good luck getting somebody to buy it.
Yeah, no kidding. It's like you got to hedge it at that point, right?
Well, you can't. I mean, your option will expire worthless. You won't be able to
Oh,
sell it, and you'll watch all those gains just become like nothing, unless you can buy the shares, which might be like $100,000, $150,000 to buy those 100 shares for each contract that you're correct on. So you have to have the money to back it up if you want to exercise the shares. And
yeah. Just from what I've read up and how you're explaining it, it's very
it
intimidating
is.
compared to, let's say, like if you're already in stocks, it's like futures and CFDs and things like
it's
that.
a
It's like
it's a
it's
whole other ball game.
you can kind of more or less like find your way on the other instruments if you're already trading like a stock or a CFDs or futures. You can find your way on one of those if you're already doing one of those.
Yeah, yeah, and like the thing is like when you're presented with options, you could want to buy like let's say like
If
Netflix
presented with too many options,
options.
you take too many options.
w- Uh, like let's take a look.
Looking like a either head and shoulders or a third drive potential, just on the short term.
Yeah, it's come back to test that B point again. But this is an example of an options chain on Questrade. So all of these are calls and all of these are puts for different prices. So you have to pick one of them. And it's like most of them, you know, some of them could have pitfalls. So you better pick the right one with the right amount of volume and everything. And it's like you buy these if you want to see it go up, and you buy these if you want to see it go down. And basically these will move down as, or sorry, these will move down as the market as Netflix goes up, and these will move up as it goes up.
Okay.
Yeah. So you have to basically pick one of these levels that that it implies that it's going to go to one of these prices or towards it.
And are like options just you can buy an option on anything pretty much, can't you?
Well, stocks and ETFs,
Gotcha, gotcha.
and you can buy it on like volatility index and stuff like that. But then you get into a really risky environment where people will be like, you know, they'll trade this, and it'll be like, well, why don't you just buy it and wait for a spike? And you'd be
Well,
surprised. You'd be surprised at how much money they collect from people trying to do that.
now who's they? The institutions?
Yeah, the people on the other side of the options, I suppose. I don't know.
The guys digging those holes
Yeah,
day trading options.
the money goes somewhere. That's for sure. Definitely not into the average person's pocket though. At that point, it reminds me
So
of like the house always wins. You know, it's like a casino. Where
okay.
people like the allure of being able to buy in with a small amount of money and be able to sell it for a large amount of money. But the risk that's there is that all of the money that you put in could go to zero. Sounds like a gamble to me, personally. And I did it for years, but I don't like it. I also trade penny stocks for years, which I don't recommend. You know?
I traded penny. Used to swing trade penny stocks for like a couple months,
Mhm.
but that was around the COVID time, and you know the penny stocks would just fly off the handle like a day before earnings. So
Yeah.
yeah, I try like I've been looking at you know different penny stocks throughout this year and just kind of keeping an eye on them. They do not move anywhere near what they used to move just like in a January, February of like 2021. Like they used to just double, triple in a day and then just crash.
Mhm.
I don't touch them. I just stick to this for now.
Yeah.
Yeah,
Yeah,
some of my
it's
CFDs as well here and there. You know, if I want to, you know, take some trades or whatever, but not risk too much, and then you just get in with a CFD and you get the good practice in and the reps.
it's surprising how much you can grow that though.
Oh yeah, no for sure.
And like whenever the cool thing about that, those companies, sorry, let me get NDQM. That's what I'm looking for. The good thing about those companies is when you make a profit, like let's say you buy 100 shares, you don't have to sell anything. It goes up, 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 up. All the profit that you're making becomes available money in your account to trade against it or to add to it or to buy something else with.
Which is crazy.
Yeah, which is crazy.
Because like you could take a position going long, you could make X amount of money. You could take technically a larger position going down,
Mhm.
and you know make more money on it coming down. Have it hit you out, get in a large position going back up, and I mean you don't have to close out any of your positions. It just yeah,
There we go.
just keep growing your current position just off the existing move.
Yep. Now it makes this like head and shoulders pattern itching to fail. Even if the neckline is seen again, it's not a issue. The name of the game today is to find hedge trades that can protect any cores captured. A new trend does form between the two new highs. And it is the trend until it breaks, so very curious about that. The readjustment of the support could be on the table also, but all of this is happening just above what I think will be the new V point ultimately. And I am curious about the distance that we made below formulating above, and that would, roughly get us to the 188, 200 or a little bit close to it. I am curious about that. Oh, this is a level that in the event that we get on top of it, trading back to it could be of interest, but it is of no use unless we get to it. The neckline, it reminds me a lot of the pattern that we did do down here. And I didn't really make it emphasized enough, but this is a low with a lower low and a higher low, all green. And we've also got that same thing going on here. Intrigued by that, for sure. Kind of strange. smaller version of the bigger one. And it's like every day we're presented with something. Do we find it? It's a matter of looking for sure. We do need to make sure that we're aware that this is a giant untested B point here. No stops are safe above it. I will mark it. And take these off. I posted them in the I posted them in the chat. So all in one head and shoulders pattern. That one's older. This line now becomes the center of attention. My attention, at least. The B point, like I said, no stops are safe above it. It's got a little B point that it's hitting right here, technically, as well. It's created one right here and here. Those levels are, sure, a little short term, but they are B points nonetheless. Any hedges targeting the 100 should be protected. We do have a new blue line that I believe we will get back to. And it's not very hard to get back to it. That's like the blue line of this consolidation. It really puts a light on, hey, are we going to make this spike again on the other side of the range maybe? Because you want to know what's funny is that's a spike we've seen before. Right here. Like, it chose to make that the spike again, whether it overlaps it or not. But it's funny to me that that was the appropriate spike that they made, and we've seen that before here and here almost as well. Hmm. Three consecutive lows also. I can't help but notice that it did make that. If you look closely, 1, 2, and 3 here. We've come back up to here, but not quite the first of the three. Interestingly enough, it is a pattern that couldn't expect it to flourish in the positioning that it's at. Bullish patterns at all-time high are a little questionable for sure. They might have some strings attached, you may say. Some problems, some extra time, some extra jabs. But what I find interesting is if the Bears are in control, then why don't they hit their target? Interesting that it takes so long. No fast fear here. Because it's not like they don't know what a target looks like. It definitely is standing out there and off of a 161 so far. It's interesting. Why so much attention to the blue line? You know, it's like its priorities change regularly. And to understand the changes, you have to understand the way things are. And like the way things have been. And they have been kind of attracted to these blue lines, to say the least. At no point does it seem to be not interested in one today. Like we're moving from one to the next, you know, stretching to be at one at all times. The moment we hit the B point, the equilibrium will be met for this S wave. Like it was here. To make the W. That kind of followed the M in a weirder way. Overnight session took longer. Things took longer. This is the B point. So any orders that have been made to hedge, you can take profit here. Also knowing that the white and blue line it's now a white and blue line. We did test it before. It doesn't mean we're not going to test it again. It's going to be part of the future. Even just a mere sideways movement at the next barrier, like the POC that we're coming up to, could get us there. Like last time that we were associated with this level, we did this. You know, if we did that again, like that, could we? Could we? We could. I mean, we might see it again somewhere. Especially if we get into the, if we start to get involved with this level here. Might be a bit much to ask on the first try. But it's like a right shoulder, you know what I mean? It's like it has the ability to be like that again. They're both associated with that move there. Now I noticed that when we did grind there, this was an appropriate spike. We definitely saw that before. Blue and white line. It's getting attacked pretty heavily. The distance that we made out of the top of the rising wedge is suspiciously particular to the distance that we are below it. And I couldn't help but remember that the way that we originated this range was to make everything even on both sides. Like it started with that spike on the top and that spike on the bottom, and then it ended with an even larger one. Because it's certainly not in there anymore. It's certainly not doing that same consolidation. It's meeting the extremes like it does at the beginning and the end. And one thing I also question is like, do you remember how in the morning it went like this, choppy? And it had a quick move on one side and a quick move on the other? What could be the value of making chop somewhere? Could it be that we make quick on both sides? It's an interesting point. Interesting point. We have been in the business of doing that. That was how we essentially created the lows. Which is kind of a very hostile way to do it if you think about it, to make lows like that. And I'm like, well, is it possible that the same kind of technique is used to get up again? Because we have doubled that range undeniably. That is the purpose of having left is to have doubled it. Now most of what we've doubled is coming back. Now that gives me deja vu to the other day when I was explaining how like W's, you know, they take that original portion, they double it, and they take back what they doubled, like the S wave that has a portion, oops, that has a portion and doubles it. Forgive my crappy drawing, but it doubles it usually and then takes it back half of it. So I mean like it starts to become, you know, if you do capture a low, understanding that there will be some sort of pullback is very necessary. And if the pullbacks happen in a certain fashion, like today it just so happens to be that the most attractive lows of the day have been off of this pattern. I'm just putting that out there. Remember? Low, lower low, higher low, low, lower low, higher low. Didn't work out that time, but it was smaller. But still, it made this pattern, and that marks the low right now. So I'm like, it is true that that low, lower low, and higher low can be seen now, here, again. Now, does it lead to it being a head and shoulders? You know, like we did the 3 lows. Are we going to do 3 highs again? Because every time we've done 3 lows, what have we done? 3 highs. So, I mean, does it end? Now. And if it does, then why? I'm like, that's one thing I'm curious of myself. I'm looking. I will look till the end of the day, you know, till I find something that is a reason why it shouldn't get to the 188s above. At the end of the day, the red yellow line gets closer and the B points do also. This major B point right here is one from above that I basically left on because I don't believe it's tested. I think we're in the process of getting above it so that we can test it from above. It means that everything that everyone fights for comes back to this point in the future. And we're not even through it yet, so how can we have a problem with it, right? Coming back down to this point? It's like, well, first we got to get above it to come back down to it, right? That's the deal with that one. I could write that in, I guess. Seems counterproductive, but it is the case. You know, like take this W that portioned out and returned most of its portion. You could say that it came back to the B point. It was fine. It's finished. But it is disturbing to me that that's not half. Like if we just analyze this right here, like let's take a an actual measuring tool and measure. Is it half? No, it hasn't even come back half yet because half would be 50. Half is exactly 50, and you know what's at the 50? Is a ton of volume and the left shoulder. So that is one disturbing part about that factor. Now we have broken the blue and white line. It progressed quite well, but we're back at it again. You know, not a new factor of the day. I mean, when the blue and white line gets hit, how many times on average have we been interested in gyrating towards it or crossing over it? It seems to be the make or break point for many of the consolidations, and a lot of the moves begin or end at them. And we'll switch between different blue lines, ones that it's interested in, like the one that we had at the beginning of the day to the one that we had at the high of the day. And it was interested in it in a very weird way, like it stretched up to it to be interested in it, then it came down to it. Notice that when it stretched up to it, it did it like that. And what did we put through the top? Was it not just even on the other side of the blue line? The rising wedge may create the illusion that it didn't do that, but it did that. And then what's funny is it took all of that movement that it did up there and then returned the favor by putting it on the other side. I'm like, well, it's crazy. I mean, it hasn't put as much. Like, has it done that? Not really. I mean, we've still got time to finish it, you would think, right? This can take some time, but we know that when it gets above that level, it's dangerous to drag stops to it. Like, I think the first target for them today was to get all these people out, and now it's going to be all these people. Like, that's an interesting perspective. It's like they literally have like a target on it. Oh, because the more it dumps down, the more people chased it, the more people shorted it when it was high, the more people chased it when it was down. If it doesn't dump down enough for a lot of people to take profit on, it's so suspicious to me. Because I'm like, what is that what they were going for? Sure, yeah, it hits the B point and everything. That's fine. But that's all it's done at this point. And anything it's done since the B point has been counterproductive for those that are trying to hold through it. And when do we stop being even? You know, like it's funny because it's true we were even here, right? And we were even there, but do we notice what it's doing now? Like, is it trying to be even around this one? What's getting more precedence right now? Is it the fact that even the smallest of movements on the very, 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 very short term picture in here are trying? I mean, like, this whole idea of needing to come back to these blue lines, is it not true that the blue lines are getting smaller and so are the moves? That could inflict change. Of course, this line right here, it is getting closer as well. I do believe that that is the support line. We could respond to it as well. Doesn't necessarily have to break it well if it does break. Last time it broke, it wasn't well. But we know. Let me show an example while we're doing this consolidation. We know that I keep saying buying in the middle is bad, right? So what about buying above the middle? Is that worse? I say yes. And at the end of the day, like think about it here. If we have a middle and we've determined that it is the middle, right? And the market moves like this, and you buy above the middle, then you're saying that the next time it gets to the middle, it will be able to spike to not only make you into a profit again, but to actually give you more. I mean, like, that's not a very good position to be in, right? It's a tough position. Because, like, if you go for, hey, I think the consolidation is going to lead to the upside, let's try and buy the lower half of it and take profit on the other upper half of it. You know, the start of the consolidation, you might take 3 and you might take 2 off. You might take 3, you might take 2 off. You might take 3, you might take 2 off. But at the end of the day, you know, once you get to that point where you're getting closer to the end of the consolidation and we know it, you can decide to hold that extra one for that longer move out there. At least it becomes the case when you get a consolidation that's not as friendly as this one. Like you know how they were at the low. I said it today that they wouldn't take as long and it didn't, right? But look, it they usually went like that, and that's just nasty, right? When they do that, because it's like you don't get to just hold whatever low you've tried for, and even if it's like some of them are like this, and maybe it might be like that. At least these people can hold through this one and that one and that one. They don't have to catch all of this crap because they actually worked hard for these ones. Sure, they might have made money on that move, but like, don't be surprised if the market moves like that. Here are the short-term targets I put in there too on the other side of the red-yellow line. It's really kind of interesting. Oh, I didn't mean to take that away either because like stops are up there and they're worried about them now. So very interesting to me. Now, when we see buy orders that come in at those highs, it's not because people are trying to buy up there, it's because people are covering shorts up there most likely. In this environment, it's like, yeah, like let's look at the daily here. This is the daily. 130 points above 1700 according to the index. So, and the index is behind. Yeah, not that chart. This is where we go. Big clump of stops, basically, up top. And like, I hesitated to draw a bunch of dollar signs next to it because they're what the institutions are drooling over right now. They want that liquidity up there because everybody literally shorted it. And if you want to take profit, think about it. They're like, oh man, we can't convince anybody. We can't sell any of our big positions when we get up to these new highs at all. And they can't take any profits off of anything because nobody's willing to um to trade up in those areas. But if they convince people to short up there, then they get buyers up here, which is perfect if you're actually trying to sell. Think about it. These little bits of squeezes and these dump offs have created this like liquidity area where they're like just feeding on the people a little bit. They're like, yeah, get a little bit more of them. They're like, all right, we got those people now too. And it's like literally this is just like a smaller version of what we did right here. Very, very strange. I can't tell you how many times we could come back down to this level. This level right here, it's the old target area. Like anybody that was short for this and had the best price put their stop up there, and like that volume that happened up there was just like, it was interesting. A lot of the people that got stopped out there, they were presented with, oh, you're missing it, you're missing it, you're missing it. If they shorted that, look what happened to them again. How do you think they feel, right? They're starting to get worn. How much more could they take of that, right? Of everything that they try to do, amounting to grinding slowly back to the high at a very inconvenient manner for people fighting against the trend. And if we know this being hedged, it means that you want to be aggressive with taking profits, dragging stops, and understanding that your position's going to get overlapped by the core in the long run. And it's a matter of how many people stand in the way. They're working tirelessly to make sure they're going to be out of the way. Sometimes it takes all day. I think it'll take less than usual. Everybody's warned because of the previous few days taking a long time to get anywhere. Like, I literally think everything takes less today because people don't have the patience. They'll be like, oh, you know what? I'll wait until 2 p.m. to show up or something like that. And it's literally like what it's been doing, lifting off at 2 p.m. And it's like, oh, well, sorry, 2 p.m. It's going to be way in the sky. way in the sky. Nobody will be able to do anything with it at that point. Going long, they'll have missed the move, I think. Shorting it will be the next major objective, and it won't be for something that'll hold for a long time, just like every other short. And I mean, if you're doing it right, you're holding from the bottom, you're long, and you're trying to find a trade against it. But you shouldn't be interested in trying to catch new lows unless it takes them from you. And you can see how violent it is about the new lows it makes. It's like you don't want to have anything to do with them. You know, it's crazy. Like the highs, a lot easier. Even though they get taken back all the time, just don't hope for them to continue because they're not gonna. At the end of the day, the funds will advance and make so much money by ownership of all those companies. The hedges, they'll be juicy this year. You can count on it. These people are really serious. They're gonna make some beautiful hedge trades. They have a great plan for us, and I think that this is exactly what we're gonna do all year. So it's gonna be great. Big clump of stops coming up. They're targeting them, I tell you. It's it's remarkable. I see the playbook. Look at them go. It's like they're listening. They don't want you to be a part of it. So they make it very, very tough. And I'm like, it's crazy. All you got to do is fight one battle, it would seem. That's all they want. They want to see that you have what it takes to endure all those pullbacks, to have the patience to end the consolidation. After all those days, you know what you're signing up for at the beginning of the day today. It could have been an entire day of trying until 2 p.m. But it's like the people that are willing to do that, they get it. And I said today it wouldn't take as long. 100%. It's no 2 p.m. reversal. Like this got going a lot sooner. Way, 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 way sooner. That's why I said, even though it is riskier to fight for, and yes, we're above the old all-time high, and in the long term, sure, we're probably going to come back to it, but you better have a hedge for it. And the more profit that we get, we can make a bigger hedge with in the future. Now we're attacking these huge buy orders right now. Watch this heavy volume come in as everyone gets stopped out. Big. What we're doing is we're allowing a few more people to short it because the double top. They're just going to be added to the mix in a minute, I think. And returning back to the blue and white line is a given, I think, as well. So it's allowed to do that, and it could lead people on. It could be like, oh, watch, you're missing it. Oh, whoops, everybody's done. So something like that could be on the table. The classic, you could call it. Like, whoops, you're missing it. Oh, sorry, no, just stopped out. It's crazy. Oh, the rising wedge is falling out of the bottom. Oh, sorry, I stopped you out. It's crazy. Insane. And it's like, well, doubling from the top and from the bottom, like, how on earth above that line again? It's crazy. Where does it get the legs from at all time high? It's crazy. I think that more people need to be hired in the government to actually look into this because they they're costing a lot of the individuals a lot of money the way I see it. Unless you know the way the institutions are playing it, like it's likely that the average human being has tried to play against this trend from the high. Like if you come in with nothing, like you think, oh, all time high, I want to catch it. After like weeks of this movement, of being like really hard to catch downwards movement, most people won't even be trying to catch the downwards moves anymore. Then it will come down. So, here's that move back to the blue and white line. And it's like it's very, very much like clockwork, a very easy thing for the institutions. They set the plan and the rules, and everybody else thinks they're fighting each other. It's very interesting. But little do they know, it's like huge, huge entities are around just gobbling people up. And when they get gobbled up, nobody else gets to learn, and they just churn out new people every week, and they just get gobbled up and gobbled up and gobbled up. They'll create like some sort of advertisement, I bet, where it's like, "Hey, get into the market. Look at Jim. He did a lot, made a bunch of money on this huge move." It's like CNBC. Wow, look at all these gains we're getting this year. It's like makes people want to be in, and then they try, and it's not good for them. I'm like, well, of course, it's like it takes, you wanted to you have to you had to find value in the time where all the news articles were saying no, and the freaking event was down, and everyone was, freaking out, and it was going hard down, and you had to find value in that. You had to work hard for it, and it took until 2 p.m. to be there. And then you had to have, not only the fact that everything that you worked for was taken back from you all day, then you had to have the integrity to keep it. After it's taken it back from you, 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 you just have to be stubbornly exposed. Like I say, completely stubborn. Like no matter what, they're not going to take it from you. It's like they can try again, 10 times, 20 times, 30 times, doesn't matter. This is the agenda. And I don't care how many times. That's why I call it an 11 low zone. Because prepare yourself for 11. Sure, is it 11? No, it's more like 5. But if you prepare for 11, you're looking pretty good. At the end of the day, is it really 11 usually? Not really. It can seem like a million lows if you're trying though, and I relate, with that. And it's the toughness that's required to get through to these levels. And these people are really struggling right now. I do want to move these letters over because, like, yeah, incredible movement though. Like we've taken this range and more than doubled it now to get here, which is incredible. And you know what I see? It's so strange. It's a smaller version of what we did on the longer term. Do you see how it's like that? Does it amount to another n going higher? Like when I show that, it reminds me of this. An n that went higher and then another one that's higher, and still went higher. I'm like, did it do it again even after that? Here and here and still went higher. And I'm like, that's interesting. We've still got many levels above. Could take time to get to them though. It doesn't have to be an easy battle, but if you're holding long, it's going to be quite the show. That's the idea. And oh yeah, this is the one. So this creates another batch of people that try to short it, and they put their stops in the big clump. All those people that just were part of that big red candle, it wasn't enough for most people to take profit. It rivaled the last people in the trend, and we're back at this node. You can see there is a node. And we do have to watch out for this. First we can get above it so that we can come back down to it. It does not matter when we come back down to it or how many times we come back down to it, but coming back down to it seems to be on the agenda at some point. And it's like, if that means that we could get a move like this, or like that, or like this, or like that, or like this, or like that, it just means like, okay, fine. If it's going to do that, well, maybe it's part of this. Maybe it's part of that. Maybe it's part of this, and it's fine. Once it's finished, we can continue doing something else. But at the end of the day, this is disturbingly similar to what we have on the long term. And yes, it struggles at the point that it's at right now for quite some time. Does it have to be the way that it was, though? No, but it pays to understand that it is set up, I would say, 5.5 of the moves out of the 6 required to complete the process that it's already done on the long term. And I wouldn't be surprised if that little bit of downwards movement not only was instigated by the people that caused this move, but they know that it will get people to chase if they move it quickly. And it does. And usually when we fall well, it falls fast, and the lingering is kind of intriguing to me. It insinuates that whatever we do fall is subject to coming back up. And it looks like an inverse head and shoulders at the high, sure. One that it's tough to say it'll let people off that try to play it, Like it could screw them over and then go up. Like that's totally fine because it's a terrible spot to play that pattern from. Like think about the people that tried to play this last one up here all the way at the high. It went down first and then went up. No. I'm like, well, what the hell with that? It's very strange. It made low with a lower low and higher low, just like it did on the bottom, and then it decided to make them lose and go up. I'm like, well, it's tragic, but it's true. So the right shoulder in this case not only makes people try and buy in the middle of the last move, but it's also trying to buy at the high, expecting it to go higher, which I think would be provided, it's a little bit dangerous. Very dangerous, as a matter of fact. But to be exposed to it is fine. It's just a small gyration. I admire the fact that they made this high higher because there's no downtrend for people to be attracted to, and that I like that. And it's going to be normal seeing that. And people will wonder how it can go higher when it breaks trends that don't even seem significant on the short term. It's because of the agenda, of course. When moves that are happening against this trend happen, they are because big money is hedging it. That's the only reason why I could see it coming down. The only reason. Everybody else is a target. If we come down, it's to make people enticed to try and short it. And if they short it, that means they're putting buy orders up at the high. And they're directly targeted. Because I would say about 70% of all the short sellers aren't quick enough to take them off before getting stopped out and being part of the next upwards push. And it's like, okay, everybody that was short in there, maybe they don't get stopped out at the top. Maybe they drag their stops into it and they're part of this push all the way up. And the people that are left are undeniably putting their stops in a clump up there. And anybody that shorted the secondary high.
Kind of looks like an inverse here, hey?
Yeah. It's definitely positioned at the high though. That's one thing strange about it, because it tried an inverse up here and it failed before working out, but then it showed everyone that there was an inverse all the way at the bottom that worked out really really well. But then we're given somewhat of a similar kind of situation from the other side of the spectrum. It It's a little bit of a rougher situation. The 61 could be seen, like the shoulder levels don't have to be even or anything in this case. I know we're at the 50 right now. It's almost just about hit that 61, where it's true that there will be some interest placed on the underside of this move here. I think that we'll get a blue line right there. It's going to be interested in getting back to that. As small and short term as it is, like, I want to know if every single blue line that it's supposed to get back to returns exactly as it should. And of course that blue line is associated with a yellow one, which goes down like that. These are the ones I can remove off just to basically take the emphasis off. The last major trend was retested. Yeah, positioning is definitely pretty huge when it comes to those patterns, and it's definitely given them a bit of trouble with it. Ultimately, I see it going through the highs though, but it's just like like the last inverse head and shoulders, it just gave them trouble first, and then on that trouble found a way through to the high again. The blue line has roughly made a distance that's similar to what it had on one side down to the other. I cannot help but notice that. And it's also an attempt to try and grab the last broken red yellow line. So the equality between that levels certainly interests me. We've got the 61. It didn't really respond on the upper side, so it got a test from the underside. You can see that. The blue line I think is more important than the 61 though, but as I said, it's a short-term line, and it doesn't take much to see how it works and to see how much data it wants to give us. Because I'll be damned if it's going to be a small short-term trend that breaks the characteristics. Like everything that we've been seeing working ends on some small crappy 1 minute like movement. I mean that would make me think twice about the next big one for sure. Because it just showed us right now that it still has that incredible interest in returning back to that blue line, and everybody that was in on the left shoulder now is back in like it just kind of screwed everybody over and came back up. It's very strange because it did that on the short term and then did it on the big long term here as well. And like I said, the blue line is associated with the yellow line, and retesting that yellow line at some point, man, they could even go all the way back to do some sort of weird retest like they did this one. I wouldn't put it past them. It's the same kind of deal, because this one right here had a blue line too. We came back up to it, and the first thing it was interested in was breaking that red and yellow line and coming back to it. So I wouldn't prevent it from coming back to those middle levels as well. We can see that this level it just hit is the POC, and it actually looks like the 61, close to the oh, it is the 61. So I think that they're still trying to get liquidity in that area up there, and everything that they're doing is trying to get people to put their buy orders up there so that they can fill them, and the institutions don't have to pay for the next advancement, but instead all the short sellers do. And it's funny because it's illegal for them to push the market up, right? But it's not illegal for them to do this. It's not illegal for them to make everyone else lose money in the name of them making money, but they couldn't just push the market up for everyone. It's illegal to do that. And it's like if everybody's long and the institutions are like, hey, everybody, we're going to push the market, everybody could be a part of that and it would be interesting. But I guess it just wouldn't work. Or maybe the institutions are too greedy or something. They make too much money doing it this way. It's crazy. And then you look up like, institutions and hedge funds and stuff like that. They look like they're all just like they show you their long-term stuff and they're like, yeah, these are all our holdings. Seems like we only trade a few times a month and stuff like that. And it's like they're huge big trades when they matter and they're super infrequent. I'm like, yeah, right. What about the dark pool order book? The one that's on the dark pool exchange that's there because they don't want you to see it. I'm like, yeah. That's an interesting one. Should be illegal. But it's like, what's interesting is it's not illegal to know how they do things. And how they do things will change regularly. It's quite interesting to see how they do things and how they change things. But the one thing has been to push the agenda and that's the long trade from the get-go, which is good. It's kind of in a stale spot right now in the short term. I think it is preliminary movement to trying to get this clump of buy orders up here. They've been trying to juice it up as much as possible. Like when they approached it last time, it was slow. Next time, it might be fast and forceful because they were like, "Hey, everybody, just drag your stop up a little bit more. You can take it." And it's like now they're accepting even more of a loss, and that means the institution's more of a gain. And that means they get to sell higher. The higher the people put their stops. And I don't even think the institutions are interested in selling their assets at these points, but definitely they definitely are interested in making people buy at the high where they don't want to be caught buying. Because I think that if they get caught buying through the top, they get dinged for market manipulation. It's like, what are you doing? Adding to your positions at the top. You expect them to go through the roof because you're buying there? And it's like, I could see that being a problem. But if they do it this way, And if they say, all right, we're not putting much volume in to create this pattern right here that everybody knows, and then when we just add a little bit more volume to trigger everyone's stops, and then it goes up and our assets are from down here, that's not illegal. That's interesting. Should be, though. I would rather them just push the market and tell everyone. But I guess it doesn't work like that. It works like this. And you see them target the stops. And oh yeah, we mustn't forget about this level. First we get above it so that we can come back to it. That can happen, as I said so many times, like what I mentioned before. And it doesn't matter if it just happens once. It could do this one, and it could do this one. You know, it could do all of them if it wanted to. It's not likely to do all of them, but if it wanted to and it did, let's say it did do all of them, would it knock you out of your position though? Like, it shouldn't. If it did all of them, took like an hour, came back to it like it's doing right now, like, doesn't matter if it comes back this much or comes back off the big clump, or does it a little bit higher, or, as long as you don't put your stop above that level, you should be all right, because remember, why I say this is, all these levels that are hitting right here, we know those levels right there. They're fine. But look at these ones. What happens when we get up here? Like, and it's doubled. Can it come back again? Oh, yes it can. All the way from up here it can come back. And you want to know what that would do? Is it would make it even with this right here, which is crazy to me. That's all we're asking for if it does that. All of that move up there. So you think this is good from the bottom, right? Double it. Then it comes back to where we are now. And I'm like, that's interesting perspective. And sometimes we go to the 261. Sometimes we go to the 161. But that's where I'm saying, does it matter that this came back? Does it matter that the 127 comes back or it chooses the 161? What about the 188? Now, if you're targeting this level while you're holding today's low, and you put, you might have this on one chart. You put this on a different monitor, right? It's your back burner. Now you get your other security that you hedge with, and you trade with that on these highs. You try to get exposure with half the position size or less at each time. And if you make some money, you make some money, make some money. It adds to the value of if your stop gets hit. And it means that it adds more cushion to it every single time that you make a trade against it. Now, you don't have to take every single move against it. You don't have to take every single level if you don't feel comfortable with it. But man, if it ever does make a really nice move at one of those levels, and you find that it can come back to one of these highs, or if I put a blue line in there and I'm like, it's going to come back to this blue line, and you find that it's coming off of a level that you like. I can't tell you how it's going to respond to each one of these levels, but I can tell you if I'm ready for it. And I can tell you if I'm attracted to it when it's happening. But we have to get there in order to respond to them. And what we've been doing here is remarkably intriguing to me because it's been incredibly hostile to anybody trying to catch a short. Which is, I mean, is that a continuation of the way it was yesterday? It's like, does the agenda continue, or does it end with the report they said happened in the morning? Which, remember, people will look today when we got through the high, like I said, and they will say, oh, why are we here? Why did we continue? Oh, must have been the report, right? That's what they'll say. And I will just be like, cringing. I can't hear it. It kills me. Because it's just allowing somebody else to take control of what you think, and I'm like, I'm super open-minded. If you bring me something, like, I'll look at it with you. We'll look at it together. We can look at it and pick it apart. It's not a matter of like I'm so you know one directional on one thing. It's like, no. Everything that we've waited for has come because it's been brought to me by the market. It's not been something that I've demanded will happen. It's like when a blue line forms, then we can trade back to it. When a B point is made, then we can trade back to it. When a trend is formed, then we can get exposure for its break. But I don't make the trends, I don't make the B points, I don't make the blue lines, I don't make any of them. I just find them valuable when they happen. And they change. There are times when I say they won't get back to the blue line. There's times where I say that we won't see the B point, we won't see these new highs, we won't see this or that. But and it's like there's reasons to believe that things will change at those times. I've grown to be able to find those reasons at specific crucial times when it counts, and it involves spending a lot of time. If it means getting to 2 p.m. every day, make it easy, to be there for that time. That's what I think. Because I looked at it like when I first went into the office every day, on the trading floor, I had to wake up at 5 o'clock in the morning to take a train to get to the main city, and then get in there, and then actually be there from 9:30 to 4 all day, usually to 5, and I dreaded it, especially the days I would lose money and they would make me wait there and sit there and watch the market, and it would be a drag, But I would have to learn. Everybody else would be doing their thing or whatever, and I would just be there at the beginning and observing what everyone was doing and what everyone found value in and so on. And it was very simple and basic. But the big clump of stops is getting attacked again. Remarkable though, because against all odds, right? You would think, oh, it's so high, it's gonna come down, right? But somebody's agenda says otherwise. Big volume in the big clump of stops there. Oh, they're trying to get people to add to it there, it would seem. Yep. I mean, they did it. They did it. They win. I'll regulate the fans there. That is the clump of enemy buy orders that I was looking for. Basically, they provide liquidity to people trying to sell in those environments. Big money. People were fooled into putting their stops there. That's the idea. Ironically, we came back down to this level how many times on passing it? Too many to count on a quick glance, I'd say. All part of the expectations that led us to knocking these people out. And I mean, like, I wish it wasn't this way. I wish it was all one big happy family and we could all trade together, but people refuse to join my group and learn. So I'm like, here they are on the other side of the spectrum. And that's the idea. I just have to get out there more. I'm making more videos on what we did. We'll see if that touches the base of the people, because I think, I have a dream that the people can actually obstruct this movement from happening. If it is the case, that it involves them being able to work together instead of fight against each other and let these people win every day. But you know, that's the seems unrealistic. But everything I do every day is unrealistic in here. If you look every single day, I'm absolutely proud of everything I've ever said and done. So very much the case as we continue through to new highs. Anybody that's holding a core is undeniably benefiting from this. And regardless of where you're in from, if you decide to hold at any other time that I said to hold, you know, you're looking for a hedge. Now, it is true, levels like this do become targets, and they will be seen again in the future. I am absolutely confident. And like other blue lines in the past, we can go ahead and apply these ones, and they will be seen again in the future also. Finding appropriate areas for them is key. And look at this rising wedge that so-called worked before is now getting put to the test. An attractive blue line in the future. I did put it there as grayed out because I mentioned if we do get on top of it, I am very interested in its return back to that level, back to the blue line. Right now it's getting a pretty precision response, not exactly on it, but close enough. The blue and white line that I just most recently placed in there is something that is very likely to be seen again in the future. It doesn't have to be off this move though. Could come back and get all these people and then get it. Would be kind of typical, but after all, having some orders on those B points is normal if you do take any hedges against this move. At the end of the day, it's quite remarkable that that falling wedge had that much of a spike out of the bottom and then replicated that on the other side just to be able to continue well beyond the entire range, and all of the people basically just got stopped out on the huge vigorous advancement of the agenda yet again to the new highs. So crazy to me. Absolutely insane. See what they're capable of, because clearly they don't want to stop. How far are they willing to take it? 18,000, 19,000, 20,000? At the end of the day, if we finish every day with a hedge, we're just as protected as they are. So the name of the game isn't to find what direction it's going to move, like every single other person. Because if you're long, you're holding in perpetuity, and your job is to find a hedge. And if you find it, it's like, well, who else is doing that? I wonder. Who else doesn't have a hedge right now? I wonder. Wall Street doesn't have a hedge right now because it's at all-time high. So we can be as interested as they are in finding it, or as interested in holding the assets to continue to new highs as they are. But at the end of the day, we know that if we hold through today and hedge today, we won't have to find tomorrow's low so long as it's above today's. And if it allows that to continue to be the case and stretch on to profit and profit and profit, it allows you to be more flexible when you're finding the reversal. You know that right now, uh, you can do half of the position size and everything and still be fine if you lose and everything. So long as you don't trade more than once at the same level, it's impossible to lose more than you have on your core. And if you use even less, then you're even safer. Knowing that every single hedge that you make amounts to your core continuing. So you don't hope for it to live forever. You know, it's like, oh, how far do you think you can make it this time, kind of thing. Do you think you can squeeze a bit more out of it? Can you get a little bit more out of it? It's all about squeezing that money out of those hedges so that your core, which you don't touch, just continues and continues and continues and continues. And is that the strategy that they used yesterday? Is that the strategy they used the day before? I'm like, oh my goodness, it totally is. And it is a good one, an easy one for them too. They don't have to do very much, you know. Like I think that their ability to deal with the people is easier because less people are trying to buy it all-time high. A lot of people tried to short it, and they became fuel for the fire, fuel for this big machine where they put their buy orders at the high. Well, you know where they put their buy orders somewhere, but you know what? They've been filled or they're at a loss. That's the irony of it. They've definitely been filled, right? And if they've been filled, then that means they were part of the buying pressure that comes up to where we are now. They might have been part of some sort of selling pressure. Look at it go. At the end of the day, you don't have to figure out where the next little low is. You can be part of every single advancement they ever choose to do again from this point on if you choose to hold. That's the beauty of it. Doesn't mean we're not interested in the high. Like everyone else that's long is just looking to get out of it so that they don't have exposure to the downside. And it's like, well, the next downside risk probably isn't as great as where you got in. Like the blue line. The blue line can be seen multiple times. The multiple time blue line. That's what we can call that. Because look at the angle of it too, right? It's easy to test. It's not getting away from us at any rate. If we stayed here for like half an hour, it could be here for half an hour roughly. And I'm not saying it has to, but you know, what about the fibs from the lower range? You know, we could apply these on here now that we're decently far away from the spectrum. We can see that we responded to a 188-200 basically. Two 188-200s. And it's also on a 5-wave move. The 5-wave moves have been notorious for getting back to the 4th waves, but let's see if it can do any more. Because yes, it's true that this level is a B point, and it is true that it's a B point to two larger 188s. This one and this one, both designed to go back to this level. Let's see if they can get through this point instead, in the name of the agenda. Because a lot of people will be shorting here, and it's like, okay, next roadblock. And it's like, let them short, let them short. Where are they going to put their stops? Where nobody wants to be caught buying. So you know that anybody that's shorted the 188-200 is getting gobbled up at that point right there, right? So at the point that we run into that box right there, it's like they're really getting some flack. You know, it's only these first ones right here that have really been able to get anything. This one's a little bit of a heavier duty one. We could turn that one up a little like that. That's what it looks like, right? In terms of severity of the resistance, I suppose you could say. Because the other one's larger and bigger, goes back to a more visible spot. But isn't it funny that all that it could do is come back to the blue line? That's not very good, is it? Big, mighty, powerful 200, 188 only so far managed to get back to the blue line? Interesting. And it's like a blue line that you can count on most people not having because it happened from 4:30, 4 o'clock in the morning to 6. Many securities don't even print clear candles at that time. Good luck getting that trend line, right? And it's very clear for anybody that trades futures or anybody that, you know, has a clear index chart. You just connect the two freaking highs and it's there, right? Like Asia and everything has to look at this and everything. They don't look at that. This is what the American public's given for that time. Hopefully they connected those highs, right? Hopefully they connected them. Because if they didn't know about this spot. Everything's fine when the market opens for them, but it's like, ew, this is what they look at instead. And I'm like, that's not good. And you know what's funny is it doesn't come up with a little thing saying, hey, half your data is absolute BS and it doesn't mean crap. You should look at something that actually shows you what's going on. But you know what? It benefits them for you to be at a disadvantage. So why would they change it? And that's where I think that it's very selective at how, oh, sorry, at how you want to value your information. You want to be very selective. And what everybody's doing is definitely not the thing that works. or you would see better results from everybody. That's the name of the game. And I see the results of the people that are pushing this huge agenda, and it's not happening on the randomness of people's wobbly trading strategies, that's for sure. Especially having seen how many patterns have failed in order to get us to this point. And it's like even just looking at the head and shoulders that we left, many times it's like it has to be so uneven, so unfair. And it reminds me as well of like when we break a trend, like this one in here, it broke the trend and broke out from that point. Everything that it did from that trend break came back, and all that was left were the wicks and spikes. Now we look at that on the volume. Look at those people in there. You could say there's barely anybody in there. In comparison to this whole area. What percentage of people are in there? Less than 10? Like, that's how many are allowed to get through the fingers of the institution. But the rest of them, yeah, it's a little tough. We can see that yet again we're going for the stop out. At the bubble at the top. Bunch of volume in there. We could come right back to it because it lets them think about it. They're like they just been stopped out. It's like and then it comes right back and they're like, "Hold on. I just lost money. I've just been stopped out. This is a level that's supposed to work." And then look, it's trying to work out. It's trying to work out. And then they get it back. We'll see what happens to them. Curious. Blue line could get hit at any time, but it's all a ploy on getting them to add more stops into that area. More stops. They want more stops. Because they're like, how do we get to the 261 without paying for it? And yeah, yeah, it's interesting. This trend, it's like suspiciously straight there too. We haven't had that many tests of a trend like where every candle is nearly touching the trend as we progress along it. It means it's acknowledged its steepness the entire time and provided the energy required to maintain the trend. It's going to break, and it will be something that we will have to deal with, but it's not going to be much of a I don't think it's going to be too much. The blue line could get hit again. Because what would that look like? Look like the last of the 3 highs getting hit. It's true that we have 3 highs here. We've usually gotten 4. Is there space for 4 though? I'm like, well, not really. Could we make 4? It's possible, but it's going to have to hurry up. A fake break is something that interests me as well. Because it's really not something that I think we're going to get on top of the trend and stay on top of the trend, but some sort of like attempt at getting these people out that are part of this selling pressure, because I think that we're adding more people to the selling pressure and they're all going to put their stops up here. Or else it'd be dropping hard. Like, you want to know when it drops hard? It drops hard. Like, it's like goes down like this. Like, this is real selling pressure. That's when the report freaked everyone out and everybody started selling like hand over fist, and no retest, no time, no lingering, no nothing. It all came down hard, and the blue line was met again. This still, the hardness doesn't really affect this trend because it's supposed to come to the blue line, so that entices more people to short it from what I can see. Overlapping them in the future is something of interest. Because I'm like, well, we readjusted the trend so far, but is it good enough? I'm like, no, it's not. 51 degrees is too steep still. I mean, what, we're gonna ride this trend up? I mean, it's possible, but rather it be like that or something, 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 something like this, something that works, you know. And I suppose, yeah, it works to do this, but the majority of when it does that comes back, right? So it's like, well, you don't want to drag your stop into this like violent movement, sure. especially if it's above a B point, but doesn't mean the people going for that B point aren't going to get a lot of trouble before it actually gets there. And it's very triangular as well from the bottom. Lacked a retest. I just want to take note of that because I'm like, where did it retest here? Did it ever care about retesting? It didn't, and it didn't here either, did it? So what did it do as a result? Well, it did that and came back to the middle of this first triangle. Didn't do that the second one, did it? Not at all. Completely ended that. It was like done with that. Back to the agenda. Now this remarkably looks like another bearish pattern that we've seen many times, a head and shoulders forming. I mean, like, positioning, I couldn't complain about it, but the environment is suggestive that bearish patterns fail before any downwards moves actually happen. And on the actual dump, it could be on a bullish pattern failing. And think about it. That's kind of stupid, isn't it, right? Like, it's like, well, we would think that a bearish pattern would send it down. But it's like, no, 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 no. What's actually going to send it down is some people thinking that a bullish pattern at all-time high is going to make it go higher. And it's those people that need to lose. According to the market, they get put under so much pressure. It's like, you really think that a bullish pattern at the top is going to work out for you because you're buying for the top. You see what everybody else has done and you buy at the top expecting for more. And I'm like, well, no, 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 no. We get up on people that think it's going to go down, and we go down on people that think it's going to go up. At least 2024 is that way. Wasn't that way when I first started trading. Everyone was one big happy family. The institutions respected the people. They didn't freaking gun them down every day like we see now. It's barbaric. I mean, why would all these patterns fail at such, at times where you could expect people to be interested in them? It sits here and lingers on the right shoulder just to allow people to short it. Hmm. It's like they're thinking, what's wrong with it? you know? And it's like a couple points more, and they'll start to really freak out. And it's like, well, what's going on with that? Last time we did this pattern, it was a high with a higher high and a lower high, and it went down. Now it's like, you try. We'll see what's going on here. I'm curious. I don't think it's made out to be what it was before, but it might lead people on to believe it was. The blue line couldn't be obstructed, I don't think, from any stops. That little bit of a dip there makes some chasers come in though. They put their stops in the red circle at the top too. You call that the stop circle maybe, or the. It's a profound thing though, but it's like people put their stops here. Or it's the blue line. And the institutions, after having hedged, will take the majority off of their profit, but what they have left will also remain in these points to add to the buying pressure to advance the cores as they get stopped out of their hedges as well. Like taking 70% off of the hedge though and having the rest of it as an insurance policy and as the extreme and clumped together with all these other people. It's another argument too to say I wasn't manipulating the market, you know, you can see right here I had a short too and I got stopped out. And it's like, well, of course you did there, but you're long for 10 times the amount of money down below. And it's like, well, we don't worry about that. It's a different company. It's like, oh yeah, of course it is. But no way we advance the core again. Wall Street makes no more money if we don't cross that high. And the agenda continues if we do. The agenda, even just getting to this point, you could tell they were like, they eliminated so many people to be able to move the market freely like this. You know, that's the way I see it. It's like it's almost robotic, the kind of trend that they have there. I just I just I just I just don't believe that it's the people that went through all that trouble to end up buying up here because they see value in it going even higher. But this is what it looks like when people get stopped out, when they get enticed with Head and Shoulders, when they get enticed with a double top, and that double top looked like it was working. There was even a W with a B point. Somebody might have sold their position to try and go for that. Where are they going to get back in? Right? The spike? Maybe. But if we look at that volume, I bet you there's nobody there. And that's why they made this move. Because if somebody was there, guess what? We would have made another gyration. And if somebody was there, we would have made another gyration. And if somebody was there, we would have made a gyration until they were gone. And I look at it like that. And I don't stop because they can play the game against me all day long, but I won't stop. If you know what's good for you, that's basically you want to fight for it, right? And it doesn't matter if it takes you know, a consolidation or if it takes if it spends the time, you know, progressing from your entry towards the target and it takes a long time to get going, it doesn't really matter. Like you could see how things were kind of slow here, and it was like slower, slower, slower. Out of that slow, we got faster out of the top. Maybe we took back that fast, but then we built on it with even more slow. The slower got bigger, and the faster got bigger. The faster still may be taken back, but it doesn't affect anybody holding from the low or from yesterday. If you hedge against, you can benefit off of the short-term declines down to the blue line. If not, it's fine, honestly. I don't think it's a juicy one. We'll get some juicy ones though. I think this is like a fourth wave, you know, eh? Something like a fourth wave. Reminds me of a fourth wave. 1, 2, 3, 4. And it's like what, 5 coming? Because it very well could be. And I mean, it's very triangular. Reminds me a lot of what we did here. Is it the same triangle? You know? Same time. I don't know about the same. Maybe. I don't know. Is it? Yeah, it looks like it. Could it be done now? Because it was done then. Like, it had roughly the same amount of time left in the triangle as it did here. And just because it was high here and went down doesn't mean that this one that's high has to do the same thing. Of course, people would think it would, but you can count on the market to do the thing that most people would think will happen. Because most people are wrong and you can count on it. That's the idea. And the market, these Wall Street people just live and breathe it every single day, people being wrong. If they weren't wrong, then they couldn't be right. And that's why it's so cryptic and the news is so irrelevant. Like you can't hear the news talking about any kind of particular kind of situation. It's always like, here's like a little bit of emotional disturbing information. What are you going to do with it? In your, you know, compiling of genius thoughts about what you think the market's going to do based off of things other people have said and no facts. Like every single thing I say is based off of factual information. Like this trend line exists. That doubled. Is this going to double? I mean, like, well, it did though. And I'm like, this would even doubled out of the top. It doubled out of the bottom and then doubled out of the top. Could we do the same thing here in the opposite direction? I mean, it's very much very strange when it decides to do these things, but it it it's incredible if you can see the need for them. That's the end of it. Like a lot of people, they crumble under the weight of the consolidation. I say consolidations invite capitulation. Like people surrender in inside of them. They give up, right? That's the best word for capitulation is they surrender. And it means that, it's like when somebody's in a long trade and it's falling, 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 they're like, "Get me out," They've capitulated. They folded under the pressure of the loss or the whatever, the sideways movement. You could tell sideways movement could do it to people. I mean, it's happened to everyone. I think at some point somebody's always been like, all right, this is taking too long, I'm out of here. you know it's like, and I'm like, now I'm like, hold on a second, it's like, how much time is in a day? I got that. We could do this. And I'm like, if this is what it takes to make this much, I'm like, yeah, let's go. I got all that time. It's like not even all this, it's not even much time. I'm like, I worked so much more in other jobs. I'm like, geez, it's crazy. And then I'm like, sit at home for a little bit and wait. I'm like, oh, I got that time. Yeah, sure. Doesn't matter if it's slow. I'm like, it's crazy. People are very interesting creatures though, when they're presented with, oh yeah, you can get to sit at home, but oh, it's going to be really slow and it's not going to offer you opportunities. It feels like jail or something. It's like, what's going on? Um, Stuck inside of a range, no opportunities, nowhere to go, nothing to think about, nothing to look at, nothing to stimulate the mind, just to sit there and basically stare at the wall, essentially. And I'm like, well, I've started to look into the consolidations a little bit, and you can see a lot of what's going on inside of that consolidation insinuated this was going to end at the same point that that one did, and did it not? Well, it looks like they both have the same amount of space left in it, and I mean, sure, it's like fishing, right? Like I say, did that fish come to me at the beginning of the consolidation? Well, how could it have? It had to be something that looked like this for me to be able to consider it. And until it formed the triangle, it didn't have the angles that looked exactly the same. And I was like, wait, those angles are the exact same. That means I can take this line over, and we have the exact same red-yellow line that just broke, believe it or not. Except they didn't invite any difficulty this time. And it's funny that it's even higher and they didn't have as much difficulty. You want to know why? Because less people are trying to go long. Less people are fighting against it. They don't have to do this to get them out anymore because they're not even here. They're gone. They eliminated them to get their stops again. It's insane. So it's like if you target these points where the people are getting stopped out, it's incredible that liquidity is provided in these locations. And it's for big money too. It's like you can take off fat positions in there, huge positions. And people that are getting stopped out from thinking it's going to come down off these levels, getting wrecked. Absolutely wrecked. I mean, like options traders and stuff like we were talking about, they take a put or they buy a put and it goes sideways like this and then rips against it, it has to fall twice as hard now easily. Get your money back. I'm like, that's just tragic. It's like, hopefully you picked the right one. And I'm like, they're all down at this point, so none of them are the right one. That's the truth of it. I know it sounds crazy, but either you can be on my side laughing about it, or you can be on their side, right? And I'm like, God forbid, you please don't do that to me and be on their side. Crazy. Because you can have the clarity, you can be here stopping them out, or you can be there getting stopped out. And I'm like, ay, ay, ay. Thousands of people will be getting stopped out in this range up here, trying to fight against the agenda. And you know what's funny is like, I just assume that it will be the institutions, the people with all the money on Wall Street that are responsible for this. I can't actually prove it. I may be the only person in the world that sees it, but it's highly unlikely. At the end of the day, that would be very bad on Wall Street's part if they weren't responsible for this. What is it? Half the other people that are smarter than the other half that are doing it? I'm like, no. I'm like, no way. It just can't be that way. I won't accept it. So. The stops got hit to advance the core. And you know, remember we were looking at two N's earlier, and I'm like, well, hold on a second. Didn't it go N and then continue? And then we literally did N, and I'm like, well, geez, it did that. It did that. I mean, like, and you want to know what that is? That's giving a big, like, big, like, screw the 5-wave move is what it's saying. Big screw the 5-wave move there. Like, look at that. Like, see how it went 1, 2, 3, 4, and 5? I'm like, that is just Elliott Wave is curling right now. He's like, that is terrible. Because it failed the 5-wave move in the name of doing this. Which is something that I noticed that it was doing on another chart, and I noticed that it was doing it here. This chart right here is 1 minute, right? And it did that, right? I'll take a picture of it and post it too. We'll just it's kind of I can take some of these lines off, sure, actually, but sorry, I was just typing in the chat. This NDAQ, I think it is, right? Nope. I keep forgetting. What is it?
NDQM.
Thank you, thank you. I was like short-term memory loss or something. I refused to remember. But that one. Oh yeah, right here. See the same idea. Oh, can't paste the picture. If I take a picture of it real quick on my other screen, that right there was the method of getting us up to where we are now. It went 1, 2, 3, 4, and then it's like, where's the 5 end at? You know, all the way up there. It's like, that's crazy. It's a 261 nearly. I've got that level circled. It's also a 188. That's a pretty heavy level we're coming into right now, actually. Interestingly, let's take a look. 15-minute here. It's too zoomed in there. There we go. So we can see everything clearly. Let me I'll post that too, why not? So you can see the resemblance between how we've managed to make both of those patterns explode to where we are now. It's quite remarkable. Absolutely remarkable. And this chart's not meant to be viewed on this time frame, as you can see. There we go. Sorry. Takes me a second there. Get everything back up and running, and we've got all these. I'm going to take them off because I know everybody looks at all the data on there, and you don't have to look at anything that we've done in the past necessarily for future reference. Like I keep a very tight focus on anything that I'm looking at any one given time, and I only focus on one thing at a time. Like the triangle, like did it not double? Like wow, like incredible doubling of the triangle. Like to absolutely do that is crazy. The agenda was to do that on the short term. I'm like, is it, or else it's the people that have all discovered it and made it happen at once. And do you think the people have done it? I'm like, they couldn't be. It couldn't be. I won't accept it for 2 seconds. You look at the strategies; they don't have anything to do with this. So I'm like, it would be on Google at least once, but no. People put the things that used to work on Google and then they fail, and nobody takes them off. Because if what worked on Google would work, then this would have come down like it's supposed to. This is a bearish pattern where I can find you many times. It will come down 1, 2, 3, 4, 5, and look at how much it came down like that. Incredible. And then it decides to show everyone a big one. You try, and then it's like, oh crap, is it gonna work? Well, this one only came down to the 4th wave. And that's what they've been notorious for doing. And I'm like, well, it's absolutely crazy how they can just it's not market manipulation somehow to do this. I'm like, I think they need to like get better people to look at it. But I'm like, if the people that catch them knew how they do it, why would they be catching them and not doing it themselves? Because if you knew the agenda, well, why wouldn't you just go home and be long? Get paid more than the government, that's for sure, right? So at the end of the day, if they could catch them, I mean, who's doing the catching? It makes me think, there should be more rules for them, you would think, but there's not. If we don't know that they're doing this too, and if everybody just thinks they're fighting against ordinary people, and I guess I can't prove it, but I see the cookies stolen from the cookie jar every day, and I just see it on advanced techniques that aren't really employed by the public. So I'm like, it's not them. It's got to be these incognito business people on Wall Street. And I had this kind of messed up theory that it could be the Federal Reserve, and that would be really, really bad. Imagine it was the Federal Reserve fighting against the public and stealing all their money. Like, that would be enough to cause a riot, right? I would be really pissed if I was American and I found that out. But nobody's looking. Nobody cares. It's like very interesting. I would care. I would look if I was American for sure. But it's fine just understanding exactly the need for the moves, and we did end up doubling that triangle. Could it double on the other side of the triangle as it did last time and creating some sort of larger S wave that goes around the triangle? Except we did it out of the wrong direction, right? It's not the wrong direction, but the other direction, which is weird. And I mean, seeing it do 1, 2, 3, 4, 5 like that right now, and it's coming down. I think it's going to go do another 3 drives at the top as well. That's another weird thing that I think we've been seeing a lot of, and we're going to see more of. Um, at the very least, it should be allowed to make the same triangle underneath it because that's what it did last time. And then, like, it might not even do that. It's like that would look like the B point. If it doesn't do that, that's fine. It would just mean that they're advancing the cores even more. Now it becomes up here. The people of the 5-wave move are directly targeted. Like, every single piece of barrier that they throw up there, we advance every single time on a bearish pattern. The high of that bearish pattern gets stops. We got to be worried when we see a bullish pattern because then a bunch of people will start to buy it and they're going to have stops. They're going to be so greedy that they're going to try and buy at all-time high, and it will happen. And there will be a huge clump of them. And when that happens, the institutions will be like, "Oh, the clump's here." Getting ready for the dump then. But right now we're interested in these clumps, taking these clumps out every single moment because they're not allowed to be in for the next dump just because they know about a 5-wave move. It's not good enough. I don't make this up. The market will decide this, but watch. It's incredible. And it's like I want to get another coffee, but I don't want to get away. Every time they take out one of those chunks, it's a spectacle. And look, they do it on the other side of a trend that everyone thought was the end of a 5-wave move. The most powerful trend to break down 5 waves in the past happens from all-time high. A pattern that's notorious for taking it down. What trouble has it brought the people associated with it at this point? They're not on a good spot. It's like, well, if it was really interested in coming down, you would think it would have done it. But people jumped in. People prevented it. People shorted it. And when people short it, they have stops and they put them up there and they're like, well, we could get a little bit more and we could have them out of the way. Because think, if they short it, they're going to put buy orders down here. That means that the institutions can't take all the money when it gets back to the B point. They want to make sure everybody's out. They want to make sure nobody's willing to short it again. They're the last people to short it because they call the shots. If you don't think they're that way, like I picture them like the modern day equivalent of the East India Trading Company, like an absolute no morals, unethical, completely will wipe out every single person in the way of them getting their bottom line, and they will do it in any way possible. They're the worst kind of people in the world, in my opinion, personally. But we have to understand them in order to beat them. And this is their objective, and you best believe they're going for these stops. And you know, I would change it if I could. I would make it more like the when the market first started, and there wasn't institutions. There was just people against people, and it was fair, and everybody had a better chance, and there wasn't dark pools, and there wasn't patterns that would fail. there wasn't there wasn't. I mean, it wasn't crap like what we're experiencing now, where it's like, hey, everybody, we're going to show you 5 times in a row that this pattern is the most effective pattern to send it down. Look in the past. Remember this one? 1, 2, 3, 4, 5, right? Super effective at sending it down. 1, 2, 3, 4, 5. Super effective at sending up. Didn't even look back, right? Now you try. It's like, oh, hold on a second. Why does it treat me like crap when I try? It's stopping me out, right? It's like, what's up? Because I see 1, 2, 3, 4, 5, and it's like, well, you got it, and it just takes everybody out. I'm like, what's going on there? Come on, again, really? The stops get hit out to advance everybody? Insane. It's not doing what Google says it was going to do at all. Now you look on Google, there's not one example of it doing this. Who's that good for? The agenda. It's incredibly, it's crazy. And this is the way I see it. And it's dangerous to not see their objective clearly as we continuously knock down more and more bearish patterns at all-time high. Unbelievable. Over 200 points on top of that 17K. 330 on top of contracts. And I wish I could explain it in a more like a lighter way, but I'm like, I consider it like danger if you don't see it. And I'm like, well, I know there's a lot of information and it has to stand out somehow. Because this isn't just the information that I give about, hey, this pattern's going to this pattern and you should take profit here. It's like, well, hold on. Things have changed now. It's all about these patterns failing in the name of you should have kept holding. And I'm like, holy crap. I'm like, I can't be any clearer about that. And it's true. It's true. I'm bold about it, but I'm like, well, this is the best way to do it. And I mean, I can't. It kills me to think of that. If one is late on this environment, then the last thing that you should be doing is trying to get involved with it like everybody else is. The next thing is going to be the next new thing, and I can't tell you that if it's going to happen on the next high or the high after, but I can tell you if I'm ready for it. Like I say, right? So at the end of the day, we can all be ready for the 261. That's the next level. That's like, okay, what's going on up there? That's the next big one. The next one where we might very well create another one of these zones just above it. This yellow line, we're going to have to deal with its break. That's ridiculous. What trying to do this here? That's not, we're not going to stay on top of this line for too long, I don't think. And that's fine. I mean, the real uptrend comes from all the way down here. I have a little bit missing out of that bottom there too, because that's how much was missing out of the other side. And I do like that support line and the angle that it provides. And I think that until that line breaks, we will be in an uptrend. Sure, it could be the red-yellow line. The red-yellow line that until it breaks, we are undeniably in an uptrend continuing through to do all-time highs. And it's like, once we get past this point right here, this time, 1338, 138 Eastern, it is physically impossible to get back to the B point without breaking the red-yellow line. And that doesn't look like very much time right there. That's not very much time. Is it enough time to test the 261? And I'm like, okay, let's say for instance that it made it back to the B point within the time that it has there. Don't you think that would be a bit quick? Is it gonna come all the way back down like that, like that? Wouldn't you think it would bounce if it did that? Oh shoot, I just recognized if it manages to get this far from above the blue line, I wonder if it would find an interest in making it even on both sides. I don't think that a single long trade stop is safe above any green dash line because of this. Remember what I said about it before. I don't care if we come back like this. I don't care if we come back like this. It's at some point we can come back to that level. And if you have a long trade from below it, you should nurture it and protect it, not by dragging your stop above, but by finding a hedge against. That's the best way to do it, in my opinion. You don't have to do it that way. You don't have to hedge at all if you don't want to, of course. But it will certainly be a luxury through any dip that we decide to make in the future if you do have a hedge. And it does involve, yes, that same battle that it took to catch the core long. The same battle where every high you take keeps getting knocked out, except you're long. Except you benefit off of it every time it happens. And that's the key. I do love a nice short squeeze though, eh? This is a good one. This is a good one. Straight to the 261. Where how will they be treated? Not very well, I suspect. 70% chance we end up on top. And that's not for long either. But whatever we do on top is subject to coming back to the 261. There's no way we don't test that 261 from above. And I don't even count what it just did there. We're going off of new information here. It's going to be basically on top of that 261 that we find value in coming back to it. And that could lead through it. But what it insinuates is enough profit should be taken off of the return back to the 261 that you can continue holding through it. Now, because we stopped at the 261, I do believe we've created another one. The stops want to be taken out before it does return back down. One level, when it does dump, this level becomes kind of like this now. Because I'll tell you one thing, it's certainly not red zoning us. It's not holding us down, and it does not come from a range. So it's not a red zone and a green zone. Like it's just literally I put it up as a red zone because it's a barrier. It doesn't come from a green zone. There's no range associated with this. It's just now that's a support zone. It's something. You know, we created something that we have something here now. And did we triple the triangle? On tripling that triangle, it does provide a danger, present a danger. And it could be within that little bit of an area there. Sure, I'll move this over. It doesn't really. I just, you can't miss this, right? And it's incredible. I'm like, geez, it's that easy for them. They make it that easy. Anybody that's trying to buy today, though, they're likely to be within the next major retracement, and they're above all the major B points. So it's like terrible. And I'm like, well, if you are in that case, it's not so bad if you find a hedge for it though, because the next trade that you take could be at the extreme. And we are above the 261 now. Coming back to it from the outside of this triangle is normal. It's a great thing though. You know, if you put hedge profit taking orders on the 261, you may experience that they could get filled. You just want to make sure that you drag your stops in the profit on the bulk of the position, keeping very minimal at the extreme on hedges. Now we know that the exposure to the break of the yellow line can lead to the 261 in the event that it is breaking. Any hedges that are exposed to the break of it could target that 261 in perpetuity until it's hit. it could take a lot of time, even after the trend break, to really get anywhere for people that want to see it go down. I think that more up than sideways to retain the gains of those that are on the agenda is going to be on the table. Anything that we do that comes down and comes back up, from what I can see. And we might not even end the day at the high. We don't have to. We can end the day on some sort of move that seems like it's sharp, that seems like it's not all just upwards movement. It seems like, there's some sort of equality towards the end of it. Soon after, I believe it will be bought back up. And we will continue to slowly grind up on the daily. Slowly grind up on the daily. And it will be on, it's likely to have really, really big dumps on the intraday spectrum, which will allow the hedgers to take advantage of it while they don't have to catch the lows that come in the 14 low zones or whatever you want to call them at the bottom of the ranges that are just absolutely toxic, I guess you could call them, to people trying to get what's good for them out of it. And I'm like, well, you know, it does remind me of that environment where things are clear here and it offers everyone a lot and it comes back down and chops and chops and chops. There's no better price than this one. And if this one was so clear, it means that the best price required you to be able to endure this pullback. And if you don't look at the profit and loss, instead just look at the profit target and look at where you are in relation to it, it's a lot easier. Because you only get paid when you get to the target. And if you get to the target, you get paid more than you thought you would. Like that's the idea. It's like, holy crap, doing this right pays that much. It's like insane how much it pays. So at the end of the day, I encourage you to find out and exactly follow along with the core. Keep one and then try hedging against it. There's no better way to do it. And if there is, then even in retrospect, if there's a better way to have done it than to have not kept yesterday's low, to not fought for today's low and to hedge against it, well, let me know. But in retrospect, I wouldn't have changed a single thing about the things that I've done or said today. So I like it, and we'll do it again tomorrow. We'll do it again every day. And we'll when it insinuates that things should change, then we'll change with them, and we'll adapt, and we'll be flexible and not close-minded. I know how well this is working now, but we can't get so clung to it. Like it's human to do, and think, well, this is my strategy. I'm going to do this. It's a money printer in the market. I'm just going to keep repeating it. It's like that's the way things are now. Next week things might be completely different. We'll have to understand those ways in order to be as successful as this week. And but if you did catch a hedge for the break of the trend line, it may come back for you again. It's very, very, it's not a it's not a friendly environment, to say the least. So making sure that you've paid yourself in the short term is really necessary. Every time it offers one of these 10-point gyrations, it's more than enough to trim some off and keep the rest at the extreme, or more than enough to drag some into profit so that you retain more of the profit. And you could keep some at the extreme. I think it's always good to keep some at the extreme. Like if you're trading with 5 against 1 NQ, you want to try and keep at least a couple at the extreme and work with the other 3 to take profit at the profit targets as we go. Depending on the size of the move, more can be held for the target, and the more successful hedge trades that you have, the more you can increase when you're hedging, depending on how big the move or good the move or clear the move is. Really, it's what it comes down to. The clarity is what the dividing factor is. The size doesn't matter. It's whether or not you can get filled at whatever target you specify is the name of the game. Or if you can ensure its profitability throughout the entire endeavor by making sure that there's no way it can come back on as a loss, and focus and like I like to say, like, eye on the prize kind of thing. It's like focus, and it's like it's just as much focus as all of the other good things that we've ever had to focus for that have been worth focusing for to obtain. Like it's that patience that's required to be patient for the thing that's worth being patient for. And I mean, is this worth being patient for? Of course. Today it was barely even that much of a consolidation. Didn't take till 2. Like it's not even 2 now. So At the end of the day, what we were waiting for yesterday didn't even start until 2, really. I mean, it started at a lower point, but the real run that everybody was waiting to catch, if they didn't catch the first low of the day, which was most people, 2 o'clock is what they had, what they were given, right? There was no better price than it, and I'm like, okay, today what happens at 2 o'clock? I wonder. Could be interesting because it was part of the agenda yesterday. And I think that by 2 p.m., there's a good chance that all the mutual funds and banks and so on are done making the majority of their trades. And the most of the people have been worn out. It's true. It's hard to be there for that amount of time, especially if you don't know what you're looking at. If you're just meant to look at a black screen all day with a squiggly line that means nothing, oh geez, is it ever difficult to sit there and watch. Especially 2 weeks, 3 weeks, 2 years after it. I'm like, if you don't find clarity, you don't know what you're looking at. If you don't know what you're looking at, it's hard to stay focused on it. And basically it's like a map that you can read or you can't read. It's like a book either in your language or in another language. So much easier to sit there with a book that's in your language. That's my point. And at the end of the day, this is a language like every other language. We're not born with we don't know how to speak any language when we're first born. We have to learn, and it takes time and effort, and discipline, patience, all of those things to be able to do it well and to be able to learn that language well. And even when it comes down to mathematical languages, like I know this one isn't one that really uses numbers, but I think it's far simpler. I would rather it be shapes and so on. Like, do you want it to be numbers? Like, no, I wouldn't want it to be numbers. Geez, that would suck. If we had to look at numbers all day and calculate them all day instead of this, I think it would be far worse. This is far easier. There's far less variables that there could be that could define our success or failure. It can only move up, down, or sideways. There's not a whole string of variables that we have to consider. Not a million things that can go wrong. You can either buy and it goes up, down, or sideways. You can either sell, it goes up, down, or sideways. 3 things can happen. You know, one of them's bad for you. And I'm like, okay, that's what we are working with every time we make a decision. And to have to specify so much that we can be in line with those 3 variables is not that it's not that difficult. We just have to make sure that we're considering the right information and that we're there at the right time so that we can be there when the fish shows up. And when it does, it makes it so much easier. It means that you didn't have to go long at all today. You got the whole day for free. You know that, right? And the day before that's the case too, and the week before, everything. If you fought for any of the times I said the hold, here it is, benefiting every single day in, day out. And it's unbelievable. But this is the third high that hasn't come back to test the last highs that it's made. We're on the underside of this trend, which is a deep retest, and it poses a threat to being able to break another trend, which is basically like the same thing. It's just this trend, it does exist. It just didn't have much interest in it until now, because now the interest, although it doesn't really have to come down a lot off of it when it breaks it, it could treat it just like this one. It could play this whole game here that it's doing, where it's like, oh yeah, trend's going to break on the fifth wave, right? Remember how far ago that fifth wave was now? It's like no chance those people are still waiting, right? Like, we've nearly done another fifth wave on top of them, you know? Like, that fifth wave started first and it looked like that, and then we did this one on top. Is that not similar in like every way? I'm like, yeah, 100%. But I mean, of course, like this time is coming up as well, which is an interesting time because it can't get back to the V point without breaking this yellow trend. And I'm like, well, technically, it can't right now. It technically can't right now. It can't, but at that time, it won't be able to get really back to the blue and white line either. That's another major factor. Because I mean, it really hasn't come back to that blue and white line, has it? It didn't really care about it. It will pay the price for that, mark my words. And every bit of gain that we have on top of that will come back to test this line. And the thing that's weird about it is it doesn't have to come back to one of these lows in order to do it. It could be here, or here, or here. And that would be weird. You know, if we coasted sideways the whole way to it, that line becomes a threshold that could cause a dump. And I expect that many people will not have understood that in from the past experiences. So I think that we will be able to replicate that again and again and again, because people won't catch on to it. It's a little too complicated. Yet it is. I think it's very simple. It's like, okay, sure, we're not coming back down to this blue and white line. What have the other blue and white lines done that we haven't come back to? You know, let's take a look at them. How about that? You know, because at the end of the day, it's quite remarkable. And I could find them in the chat too. This one right here. This kind of environment where it had a rising wedge, which is a bearish pattern at the low, and it blew through the top, blew through the top. How it managed to come back to that was like this. And you can see that that rising wedge was all the way in the back, and it went up, 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 and then went sideways for so long, and then finally broke and came down. This is an incredible push. We have to watch out for new hedges. This line becomes at risk of breaking. We do have to watch out for it. Like a smaller version of a red yellow line for the bottom. And it's like, remember this first one that I posted on there? It was down here. We've squeezed them all the way through each one of these highs to get to here now, ladies and gentlemen. This is quite the spectacle. There's a blue line that I guarantee you we will see again in the future. It is this one. Not very far away, but it is one that we will see again. Easier to make it to than some of the other ones, you could say. And any highs that we do pass, of course, at this point are becoming B points themselves, small ones. They don't have to spend much time above them before hitting. The same distance that we see on the bottom of the blue line could be seen on the top here. And now I think there's far less stops that will be kept at the extremes than there were at any one of these other levels. Because we knocked out everybody at the 261, knocked out everyone at the 188, 200, and every single person along the way here. The ATR's got to be taking a beating by now too. The average candlestick size on the 1 minute is 5 points. And the other indexes are starting to really fade out. Barely ever really moving at all. Just weak. Divergence is starting to set in. Curious about this one. Wow, geez, we're way up there on the NASDAQ. No divergence. The other indexes, though, yeah, they're not in the same kind of boat. Or, see, oh, 500. There we go. Like you can see they're starting to wean off a little bit. Downwards movement on that. Downwards movement on that. Starting to really, like the SPY can barely print a candle. Like it has gaps. The Dow. Divergence. Still playing along with the rest of the indexes. And the NASDAQ approaching the 361. Very slow and grindy. Turned up. It's incredible how many times we have now made that initial triangle in distance to get to the 361. The slow squeeze. Another one of those trends that reminds me of the one that they did here, except a lot smaller. Across all of those lows. The initial pullback is typically sucked back up, but we shall see. Volume still really low. The average candlestick size could increase. We don't have to see it 5 points forever. Watching that blue line for sure. Let's mark the untested B points along the way up. So, starting from all of these here, we've got short term, many. I still consider that one untested. All of these untested. The lunge back towards that blue line again. I noticed that people are obstructing its ability from getting all the way back to the blue line. So things could be changing with that now. You know, and now even as it gravitates remotely close to the blue line, you know, it's having trouble getting to it. So things could change like that. People might just be getting used to it. It's quite a simple thing, and I would expect it to start to turn on them soon. Just as they're trying to figure it out, making it part of their trading strategy, it will change. And it will treat them like this. Like anybody that didn't take profit at that blue line, that's literally going for them, because that was literally the point, and it's like it didn't even make it there. I'm like, call it cruel, but that's the way the market is. It's like it presented that as a target multiple times in the past, and if you made it a target, sure, it didn't get all the way there. And this is how it's treating people. So we remember this. We don't just feel bad about it or nothing. We remember it, right? Because it's power to understand that this can happen, that this is something. And you're lucky that it only happens in a little 10-point range, too, right? And it's not a big move that actually matters. Like I said, the first move is likely to get sucked back up, and it is. But doesn't mean that the next ones will. Being exposed to that break of that red-yellow line as a hedge trying to take some profit at the B points as we go down is not a bad position to go for, but just understanding that they can continuously come back on you until it falls down. The name of the game is to fight one direction, and that's to fight for the short. And if you have the long, you can do this a lot easier. At the end of the day, I wouldn't expect anybody to be buying above all of these bearish targets and so on. And every single time it creates a downtrend, it's really important to have awareness of it, because when we break that downtrend, that's been the cause every time of getting back to the new high. And any short positions or hedge positions are incredibly at risk at the moment that it decides to try and make that trend break. But trading back to that blue line is it's basically the same level that it made here before. That's the funny thing about that blue line is when it comes back to it, it's going to be higher every single time that it does. And now it's the case that we can't come back to it unless we break the entire trend. Yeah, it could be interested in making a head to a head and shoulders even. The right shoulder might not even form. Notice that there's two little B points in that W there as well. A characteristic we've seen in many of them before. Of course, this is a B point now too. It's good to understand how it's been treating them as it's been going up as well. Which ones have been tested, which ones haven't. How quickly the short-term ones have been tested, the longer terms kind of not so much. It's because they're all going to get tested at once when they get tested. Kind of like it's a fifth wave on the very, very short term. They have been elongated lately though, but we'll see what's up with this one. Its short-term trend is literally right here. Now it's testing that top line again there. It's been glued to it, the yellow one. I think that's coming to an end pretty soon. But when it does, it goes sideways. That's the interesting part about it. To the red yellow line most likely. I don't think that this move really ends with a big dump. It ends with sideways, which is good for hedging. It's good for small moves, good for, people that are looking for small moves against the core, but not really anything like a huge home run like people would think it would be. Because I look at this as like the agenda is to keep the assets running. Any dips that they're going to be are meant to be hedged. The name of the game isn't to give up the assets so you can turn on them and then make them all come down. As I said yesterday, they're still going to be holding their Google, their Apple, their Amazon, their Microsoft, all of it. They own all those companies. They own the whole index. So they're not going to give that up. And the name of the game is to hedge against it. That's why they name themselves against hedge funds. Effectively, benefiting above all odds to continue holding through the highs. And under no circumstances have I ever said sell. Ever. Not even once. Didn't even mention a bullish profit target. Not once. Because the name of the game is to keep the assets and to hedge against them. because there's not an end for this position. You can keep benefiting with the people on Wall Street that literally will end when they have a hedge. And they know that that hedge can benefit and benefit and benefit even for years. It's not going to come where their core is, though. Not going to come as low as their core. And one day that hedge will be knocked out for those cores to advance, or else America stalls out. No more companies are going to be advancing again, and we do not see another all-time high. That's what the other side of it is. And like moves that would get us to the blue line and so on, like they can end up in general looking like sideways movements. Like I don't care if the next time we break a trend, it is as violent as this or this. It ends up looking sideways by the end of it. Most people will not think that. And it won't dump enough for most people that are caught in a short to get relief. And this is the way that it is. It's very much the institution's against the public right now because you as a matter of fact the people aren't buying at the high here. The Dow kind of spiked up a little bit more on this past 5 minutes, which is intriguing to me, seeing them move differently again. Oh. And when it does come down after sideways, like when I mentioned this blue and white line, when we go up, 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 usually we get locked into a sideways movement, and it can go all the way through the whole weekend till we meet that line and then dump through it, which is interesting because a lot of the people exposed for that dump are being put into really like uncomfortable positions for the end of the week, you could say. Now it's 2 o'clock, just passed, so it's in a controversial time where things have been changing recently. ATR will change typically around this time. We get an increase in the average size of the candle. Oh, geez, this is the 100% extension on is this chart? Yeah. So earlier in the day, we were looking at this movement right here on the 15-minute chart. It is just stretch to meet it above the 261, above the 200, stretch to meet that level. Like I say, it is now my job to catch the highs every single day that I live and breathe while holding this long. I don't sleep until I've caught it. I don't eat, I don't do anything. It's my life. I catch this move because it is security for my life. Sorry, it's not that one. What the hell is it again? NDQM, there we go. NDQM, there we go.
Yeah, NDQM.
So that's that 100% extension, which is kind of it's extraordinary. You know, and the agenda did continue drastically more than it did yesterday. Like what is this what do all the people get to look at? What is it again? Up 300 points on top of yesterday. Where yesterday it was clear that the name of the game was to hold, and we could see more all-time highs. But now we've met this point, and it's done more than it has ever before against the trend, which isn't much. Which isn't much. You best believe the first dip against this trend is going to get so many people chasing onto it. There is no chance it's going to be the end of it. The first dip, the first gyration, it's going to get a bunch of people short in it. And they're likely going to get stopped out before it comes down. I like the idea of coming down to these 188 200s. Like, could we not agree that these are huge 188 200s? There's like hundreds of points to get down to the B point, right? And like, what did it do at those levels? It did not care at all about them. It did not offer any profit for anyone. Like, if people were like, oh, look at all the money you could make being exposed to those things. Not today. Interesting. That's the trend until it breaks. We're in an uptrend. Now, it's funny, because we got a sneak peek of what a trend just like this did when it broke. And what it did was come back to the fourth wave. 1, 2, 3, 4, 5. Back to the fourth. That's typically trouble time for most people. In these bullish trends that we've been seeing, many of them have only come back to the fourth wave. A grind could be on the table. Because that would be like the cherry on top, right? Is all these people that are fighting against it, fighting against it, fighting against it, and then it closes flat at the high. or just in a flat. It doesn't have to be at the high, but it could be somewhere that's like on top of most people still, and grinding on top of where most people need it to go. It's like if we've got most of the people short in here for whatever reason, right? It could come back and sit right on top of them just to taunt them because they won't take profit. It's inhumane. You can count on it, and most of them won't, at least. Just like nature. And you best believe Wall Street thinks they're winning right now. Heavy. Well, they are winning. You can't deny they've seized full control and sent it to the moon on a bad news article that happened. That's when it all started. Started the day with a big dump. The reversal of that dump was the beginning of this move. One thing I am watching, funny enough, is actually the low on the 15-second. We're approaching the extreme for the first time in a long time, you know. First time in a long time. It's overstretching itself to get to the bottom green line on the 15-second chart, so that could present a barrier. The red yellow line broke. Ah, it got to it. Didn't break. And this fits in line with it getting a touch. Now it pops off of it. Short term, I see the head and shoulders to inverse head and shoulders. The inverse head and shoulders doesn't have to be too effective at this high though. Reminds me of a triangle we've seen before. Not exactly the same way, but the triangle sequence might be coming to an end as we know it. B points have been created down below. I guess there's even one more in here too. Good to have them all marked, because we know that on the other side of that trend break is the only way that we'll ever get to any of them. And until that trend breaks, it's impossible to believe that any of them can be filled. So it's all about exposure to the trend break, which every moment that goes on, we have to exert energy to stay with it, which isn't too hard to do, but those B points are getting hit right now in the short term. Nice movement though. That was pretty sharp and fast and like out there. Oof. That's a nice one. Trimming some off there. It's like if you're in from the trend break, you shouldn't drag your stop in the path of it getting hit. Keeping stops at the extreme is probably the safest in the environment. So this could very well be the range that we end the day in. It would be nice to get some profit on the hedge more, but at the end of the day, it's like it has to be made safe by this point, so that in the event that this is as low as we go, you're not hoping for it to go more or anything like that. It's all about you've been paid sufficiently for the break of the red yellow line by this point, because there's no other time has it returned or gotten to the red yellow line. Like what I posted in the chat is this. Great moves we're looking at today. Looking for the red-yellow support to get touched soon. That's when it was at the all-time high there. To get touched. Not necessarily to break. The touch was the first profit target. The second one, I was explaining how, it's only those that have the exposure to the break of that red-yellow line that can ever expect to get in for the B points down below. And yeah, sure, if you're in from anywhere from below that consolidation, um, or in that consolidation, you're able to trim off enough to be able to secure whatever you have left to hold so that we can reap the benefits. Like I have some fat orders underneath this level. Hopefully we can get there. That'd be nice. But chugging through all these people that think that they can drag their stops up the steps and it's going to be easy. We've knocked out 2 sets of steps now, and I noticed this. And the blue line, it was once like forgotten, has now been returned to again. And roughly we're the same distance out of the bottom of this purple line that we were out of the top. So that's an intriguing fact. That's the first B point hit there. Spiked out of both sides, and we're back at the purple line there again. That purple line has a lot to do with this top one. Be careful. In the history of mankind, it's been known to stray the range and go back and forth between it. So I'll have to tell Randy too, because I did consider it at that low, because things are different in this range, and I do like, um, you know, gauging its extremities that it's making and understanding them for what they are. And I like the outer VWAP, or sorry, not outer VWAP, the yeah, it's true. The outer VWAP band, it signifies we're at an extreme, as well as the green line on the 15-second RSI can really give us a good indication of its ability to go up. I'm trying to trim some off right about here. There's good for me. Okay. VWAP. Good spot to take profit, not a good spot to trade from. Good spot to trade to, not a good spot to trade from. At the end of the day, I was just hedging on a different account back up because I knew it was going to come back up anyway. So at the end of the day, it's if you're going to see it, you're going to take advantage of it. Why not? At the end of the day, you play it down, you play it back up, and I'm looking to overall get that exposure to the downside. Any movement that I say to the upside should be like, you should be, worried about it if I mention it like that. If it's going to stray the range like this, we want to be careful. Like it could use all of the range. It's hmm, interesting there. The high of the node. Undeniably, we've created some B points down below again. Testing that VWAP is on the table. Obviously, the B point is the VWAP as well. We've gotten back to the point where the high, oh, this is interesting. So we could make a low that basically, I wish I had more for that one actually, but there was a need to create the head and shoulders to inverse head and shoulders. I'm seeing that all over here. I'm like, well, hold on. We've got the left shoulder, the head, the right shoulder, the right shoulder. I like it. It did it before many times. Curious to see if it'll do it again. If you're in from the high, you keep your stop there. It doesn't really affect you if it does it or not. But if you're not in anything, it could be something of interest. Returning to the VWAF is a major prerogative as well. The VWAP. Beautiful. Nice. The other B point. Now it's an inverse head and shoulders. And it might fail. So I'm curious about it. It does create another downtrend. Typically today, that downtrend has been responsible for breaking to new highs. It's a fact. Can't break it unless we get to it, and it's far. So could we play out to it? Yeah, we could, but it's asking a bit much, Could get to it, play it out a little bit, and then fake break it or something. That would be on the table. People wouldn't expect that. But what has been working to get it up to where it is? is going to start to falter. And I think that showing us this, which, let me go into the chat here and find the beginning of the day, we were doing this. This is the same thing as this. And this was at the bottom of today, 10 o'clock. Now, producing the same thing that got us up to the top of day at the top of day is not the same thing. What I do see is a triangle, and I am interested in whether or not that triangle wants to double. But it may not be in the direction triangles have been doubling. After all, it's not the same triangle that's notorious for doubling in that direction. We're presented with something else. Now why, if this triangle was so effective, did it ever need to stop? But something has caused it to. And I think it's the 100% extension on the 15-minute, ironically. Oh, I was talking about that earlier in the day. I set an alert on it. I'm glad I did, because I would have forgotten about it altogether. But I truly believe that that predetermined high is exactly the reason why we're here. The other indexes are trying to do this as well. I think everything changes in this one. But you see how ultimately it didn't end with a big dump. It ended with something that was like, oh yeah, it was roughly similar size to one of the other moves that we did. You know, as I was explaining this earlier, make a good video out of today, but we do that? I mean, like, give me a break. We did that. You know, the size of this node is that move. And it's looking like it went sideways because of it. It doesn't even matter that we did that move, does it? I mean, it's a great hedge, but other than that, sideways. Contrary to popular belief, most people are fighting for it to go down. Most people are losing money. At the end of the day, if you're long and you're holding, that's the best way to play today. That's the way that I said to play today. It's tough though. It's inhumane. You know, a lot of people give up the long because they're satisfied with the profit. Never seen that amount of profit before, so they give it up and try and fight against it, lose all the profit they made. Human. That is human. Things that you get kicked out of the hedge fund for because you can't be caught doing stuff like that. So you can't be, you know, I know their enemies aren't doing that. You know, they're going to end up with our money if we do stuff like that. So not good. We know that the name of the game today for the people that won was to hold. And if you held from yesterday, you made more money than if you tried to catch today's low, right? And that's the thing. It's just too hard for most people. That's why there's not a lot of people in here. It is just simply too hard on their brain. They cannot literally get it. It's hard. It's so hard. And you can fight, and you can fight, and you can fight. You can have the energy every day. But then it comes down to, you know, can you do it for 3 days in a row? Can you do it for 11 times in a row? Every single day, 3 days in a row, 4 days in a row, a year in a row. And I'm like, what are we in for now to catch the highs? This is a little taste of what it's going to be. Many people will think they've caught the high so many times, and it won't be the case. And that's great for people that are hedging, not so much for people that are just trying to trade one direction and escape before the market takes all their money back. Most people. I'll just say it how it is. And, you know, I look out the window, that's what I see. And it's like it's tough to be the individual in the environment. You know, they just wanted to wake up and make it easy. They saw the market was high, they tried to short it and never caught a break. You know, it wasn't back and forth for them like it could have been. You know, it could have been back and forth in a range, allowing multiple people to get in and out, but instead it was absolutely came down to a moment of reversal, a pinnacle of reversal, where unless you were on that reversal, you had to be in from before. And I mean, like, why did it come down to such a crucial pinnacle of reversal? You know? And it's like, would the people have it like that? Or the people that are fighting against the people make it like that? Because it's hard for the people. That's my 2 cents on that. I mean, I see little bits of it every day. That's why I can't not mention it. I'm just like, oh, it's so clear that that's the case to me, and I'm like, I try to make it clear, but it's like I'm describing a battleground where people get absolutely destroyed, and it's in the name of this giant machine that nobody can see. Everybody thinks it's something else that's taking their money, and they don't know that it's Wall Street, and they're just oblivious to it. And I'm like, well, this is great for Wall Street. You know, if they don't even know, if the enemy doesn't even know you're fighting against them, it's like it reminds me of like killer whales going after seals, and like the seals are blind. I'm like, what? I mean, like they don't even need to be blind, and the killer whales still eat in nature. I mean, like imagine they were blind. Now, how much more of a chance would they have? They wouldn't have any chance at all. And I'm like, well, it's terrible. And you know, it's it's when I look outside, all I see is individuals considering other individuals. They don't consider the actual big machine that owns all the companies and all the entertainment companies and all the food companies and all the technology companies, all the media companies. Every company, they own all the monopolies. So it's like you say, oh, we're not allowed to have a monopoly in the grocery store because, you know, one company has a, you know, a monopoly over everything, but a hedge fund can own all the grocery stores and they're not considered a monopoly somehow. And they benefit off of every single bit of money that any one of them makes. If one of them declines so much, they get taken off the list and the other ones benefit. But if something isn't cutting it, then they get cut out and the rest of the market will pick up the slack. 100%. And it's got a little bit of favoritism to it as well. Like they'll have a little bit of favoritism for the ones that they think that will move a little bit more, but their general exposure is a broad one towards the entire market, and their ownership expands faster than they're willing to show. They won't, you know, and I believe that they're syndicates. I think they're illegal entities that cut corners and break the law, and quite effectively, we can't catch them. So if nobody knows they're doing it, so much harder to catch. But there's no way that they are legal. At least that's my opinion. I can't prove that. I can't even prove they exist. Maybe it's the composite man, like Wyckoff says. It's some magic person behind the scenes just screwing everyone over. Unless you see the way that deity is dictating the market, well, then we can't trade it, I guess. I'm like, well, I didn't come up with that idea. I didn't come up with it. I swear. But I'd be lying if I didn't believe it a little bit. A little bit. Because I do believe that people are doomed unless they see the right way, and the market moves one in the right direction at all given times, and it's us that don't see it if we can't be a part of it. You know, it's always us that's the problem, never the market. The market's always moving the right way. It's always constantly moving in perfect synchronicity, absolute perfection every single move that it makes. And it's us that don't understand it if we don't see clarity in it. Because I don't think in retrospect every move can be explained. Like if there's a move that we don't know about, like that we think, like a lot of the moves, like the one that we're making right now, back to the view app. I could be talking about the need to come back to the view app every time it does that, but come on, do I need to do that? I don't want to do that. How many times does it come back to the view app? How would you be able to understand the actual important stuff if I was, just talking about that all the time? So I try my best to make sure that we're focused on the right thing at all times. Right now, it's in the middle. At a place where I did mention it's good to trade to, but not good to trade from. But it is very interesting to see it go through all of these hoops and jump through all of these things and follow all of these rules just to advance the bottom line agenda and to ironically make it difficult for anyone that doesn't see it, which is very interesting because we've seen what happens when people fight against it. And until it's become, I only posted in the chat once any kind of thing that to expect. First, it was to expect a touch of the red yellow line. And then we talked about the break of the trend and the need for exposure to it. Basically, every single moment that it was above that trend, it's a battle to make sure that you effectively find a spot to get in for that trend break. And at the end of the day, it doesn't even really matter if you missed it. Like every other one that we've had on there, does it matter that you missed this one or that one, or this one or that one? Not necessarily. Because at the end of the day, what matters is as long as you didn't choose to sell the core. And that's the option of every human being. And I'm like, I don't know what human beings that aren't just indefinitely holding because like they're not day trading or anything like that, but who can be presented with so many targets like this and then all of a sudden demand a target 10 times the size of anyone that you've seen, or move out of a range 10 times the size of any pattern that we've seen. And it's like, what's the value? If you know your exposure is indefinite from yesterday even, and I'm like, I could even go off of today's exposure from the low, but it's been going and going and going. And here's the original spring and spike. This is where I'm starting the video on, and I'm barely 10 minutes through, and I've got like tons of stuff I want to put in the video. And I'm like, another thing I notice as well is like a lot of people, they'll see a lot of information on the chart, and I'm, even using a chart right now that actually has less information on it than usual. And yeah, it just reminded me one thing as I looked up, and I remember when we were here, and I was like, it can stray the range. What's it been doing? The whole time, it's just been like using the range. I don't know why it lags out like that. Like, come on, TradingView. Let me draw back and forth for crying out loud. Here we go. But you know what this head and shoulders to inverse head and shoulders ended up doing? It's like I can't help but notice that it did that, right? And it went up like that, but that's it. That's all it did. Everything went sideways after that. And it's never done that before, It's always went up after. You know that the inverse head and shoulders that ends that move usually is, I mean, it was responsible for this move. Like it was responsible for being one of the last patterns that it did. Like look at this. Left shoulder, head, head, right shoulder, right shoulder. 3 highs and 3 lows, of the middle one is the biggest, right? That's the easiest way I can explain that. 3 extremes on either side, middle one is the biggest. And it's like it's a crazy pattern because it makes people think this is going to go down. When they see that, they're like head and shoulders, right? It's going to go down. And then they're given that, and it's like, well, what's that? That's an inverse. It's going to go up. It's crazy that the market decides instead of making patterns normally, right? It'll do this now. So I mean, like we can either accept it or neglect it, but this is what it's chosen to do. And then sometimes it'll throw in, hey, remember the three highs is supposed to send it down, right? And it does this. I mean, what on earth compelled it to make it to the neckline and go through the top and never see that again, right? That's a really cheeky move in my opinion. Because it's not like it's not high. That was at all-time high, I believe, when we were there. hmm And what a way to make new all-time highs and to recognize that as all-time highs. And look what they did to these people right here. Left shoulder, head, right shoulder, head. That's a weird one. It did work out though for the inverse head and shoulders people, but they better have taken what they were given. And what's funny is the head was produced out of the neckline or out of the shoulder level, but that's what it decided to do to make the current high. You know, nothing marks a higher point than the spot that we were doing this ridiculous thing. And I just like to make that out, you know, it's like this is what it chose to make the characteristics for the high. The next thing that it did was a consolidation, separated by two moves, exactly. Similar, not the same. But we also had an inverse head and shoulders down here, and we didn't have a head and shoulders up here somewhere, unless we're still making it. But where's the head and shoulders that goes along with this inverse? Here, that was a fail. I mean, I guess that was the try. Because there was three moves, like this one to mark the shoulder, this one to mark the head. Sorry, I just like to check sometimes because you want to know what this is doing. The exact same thing that we did at the beginning in a different way. Like, check out how it was a channel here. And on the each side of that channel, like, we undeniably have a spike. Now, I just want to point out that when we were all the way down here, we did the same thing. Where there's a channel. And let's see. It had a spike out of both sides to begin with. I don't know why it's not letting me draw it properly, but like that. It started like that. And have we seen that since it started? It's like it's I consider it my job to find out. Let's find out, you know, like we have to see if it's done that anywhere else because you want to know why it's important. If we've only ever seen it at the start and the end, when we did it last time, we took these two and we made huge circles on either side. Well, huge distances. They weren't circles. You can't make a circle. But you know, it did do the it did do this when it was done. I remember. Does it do that again? I mean, it's been incredible how much we've seen it go from wanting to do things like 1, 2, and 3, and then making a fourth, which I can't draw on this for some reason. It's I'm going to take some of this off, actually. Maybe that's what it is. Some interesting volume coming in there as well. This is a level that I still believe we actually will come back to in the future. Not anytime soon, perhaps, but it's a level that I don't think we've tested properly from any respectable fib level. Any respectable fib level from that point's obviously not worked out either. That doesn't matter. Testing the high of that gold bar. Like everything we've ever done outside of it has always ever been wicks and spikes. It's almost like we have a blue line there. That could be seen again pretty easily. It's funny that we got to the other side of the spectrum on the RSI as well. Still have that kind of grindy aspect to it though. I'm going to reapply the VWAP. Notice the purple band is now under us. Getting back to it, it's on the table. Notice how a rising wedge started that run again, contrary to popular belief. There are B points that still remain untested down below as well. Everything it seemed to have done outside of the top of the purple band and bottom of the purple band was pretty eager in returning back to it for the most part. The third high, 1, 2, and 3, has returned back to the first of the three, typical profit target for those that caught the third high and targeted the first of the three. A pattern that looks like this, 1, 2, 3, and returns back to the first of the three, a three drives pattern. 1, 2, and 3, return back to first.
That was also 188, 200 on the short term.
Short term. And I noticed it was touching the top red line on the RSI as well, which is kind of cool. But it was a bearish divergence. Like the between the two highs here, there was a little bit of a bearish divergence. I don't think it's shown on the 1 minute though. Not particularly indicating, much more than what it did. But how much of an indication could it really be? But it's the high, and it is the way it made the current high. And unless it makes another one, that's the way it's done it. But it'd be ironic if it was off of a short-term move like that. Now it counts on the fact that most people considering short-term indications won't hold for a long time. You ever think about that? That's one thing that intrigues me because I see all the indications because I'm there for a long time, short-term and long-term, consider all of it. And I'm like, well, that's the best way to do it, in my opinion, because I know that that's what they do on Wall Street when they have the long-term interest of holding the assets and trading against them as hedge trades. Any trade they make on the short term is a bonus, sorry, to holding the long-term assets. Now it's the case that we're underneath that purple line now, so I'm curious about that. In the past, it's been a pretty bearish indication. If we can make a new low off of testing that, it's kind of in the middle right now in a battle for that level. It's kind of an important level. And also the question becomes, with this standout high here, this one high that we have, the momentum indicators have only really given a chance to be able to use that one high. I'm questioning whether or not in the future we make some sort of other secondary high to be able to measure that one against. Oh yeah, sorry. There's a it's pretty crazy how high that orange line managed to get the 15-minute. But in this range in particular, I can see that because we've started ranging, the momentum indicators have started to become a little bit more relevant on the short term. And they changed how they're being responded to. The divergences and everything will start to matter a little bit more, I think. It's almost like we've made a little bit of a 5-wave move attempt here, and it's all grinding underneath that purple line, which is kind of a bearish situation if it makes a new low and all it's done is wicks and spikes out of that ridiculous purple line. I mean, it's not too far off what it did out here. And kind of a strange indication. But what that indication came from originally is when I saw it on the daily. Well, no, it wasn't on the daily actually. It was happening inside of this day. I can only get to it to show. It was the cause of this initial dump. And you know what's weird about that? Is that was like the first one, right? Like that was like really the first kind of pullback in like this whole push that we had there. Which this is the daily. This is how it looks. Well, initial lunge below that low. Now remember what I said about this range before it poked out of the top, is it could make it on both sides, right? Like that spike, it's kind of not the same as what it was in the morning. But I'll tell you one thing. They both come from a triangle like that, and they both have a spike on both sides at the beginning. That have the, and this one's missing one. So I'm like, it is true. So the spikes suggest that what is given can be taken back. The middle VWAP band is kind of in the ballpark of being that same kind of distance away. So we're gonna watch out for that. A little bit of a A little bit of a jab, maybe. Of course, the VWAP is notorious for taking volatility away. The only thing I think about that is we're stretching into the overextended side of the short term, getting to this VWAP. Like we'll be almost at the green line on the 15 seconds, so as well. And I think it's been pretty relevant in this range since we started ranging, but when we meet those extremes, we really want to consider what else we're running into. In this case, there's the blue line again, eh? That's been a pretty notorious blue line because it's been the only blue line other than that one since we've been associated with this area. And that line broke. It doesn't have a retest though, so it could be interested in retesting. Also, I really want to keep in mind the imbalance is coming up, the weekly imbalance, and we could be seeing some movement on that weekly imbalance right there. So let's keep that in mind as well. So far, what it's given out of the bar it took back, and that was the risk I could see at that moment. Which means, you know, if you've got some, you could trim some off when it makes the spikes and so on. And didn't quite make it to the other side of the range, which is interesting. I would have thought that we would have stretched farther. And it's funny too, because 1 minute, it's got plenty of time to stretch still down to the other side, which is interesting because we'll probably make a leap again back up to try and hit that level. And it could exceed the highs again when it does that. But this bottom level on the 1 minute is starting to become an interest as well. I'm starting to think, hey, could we get to that bottom level and this one at the same time? I'm wondering. Now we're getting to the extreme on the 15 second. It'll have to get through that somehow in order to get down there. But look at how precise the high was on that side of the range. And you want to know, I just couldn't help but notice that that was the case on the short term. Like now it might want to be the case on on the long term. Oh yeah, it was also the case on the short term, but the short term, yeah, the short term had a nice bearish divergence at that point. Sorry, this.
Just missed the 161 as well from that move.
Oh yeah.
Yeah, just from the high.
Yeah, it certainly felt that that middle level there. Let's take a look here. like the smallest inverse head and shoulders on the short term there might be responsible for the trend break, but it's very likely to want to come back to this point after it's broken the trend. So do we hit the top purple band again? I mean, after having broken that bottom band there, it managed to not only take that range, but triple it out of the bottom, which is kind of intriguing. You could say it doubled that portion. But it certainly put a spike of relatively equal size out of both sides of this pattern. Now, the interesting part about this pattern is it was responsible for taking us up early in the morning. When it ended with the two equal sizes, the next thing it did is similar to what it's doing now, is ran up on an inverse head and shoulders on the very short term, and then it wiped all of it out and then went up. So if it was to do what it did there, it would be to go up and wipe all of it out. Is it going to do that same thing again, or is it over? It's interesting because it only has this much time until an event, the final imbalance of the week. But like I said, the dips that we've had off of the highs since we've been up here have been kind of like not super relieving for the people that have been struggling with the short. Like if you think about it, people that are struggling with the short, um, the moves have been taking back pops really. Like they haven't been really coming back over previous consolidations or anything. Like I think a lot of people are caught in there and lower because it started to move a little differently up here, and anybody that is basically still holding on is now an entire cycle away. Now what's interesting about creating something at the bottom, it means that it comes from somewhere like this, and if we do that same thing up here, could we be interested in doing this? Because we do that so much. It's like the way. It's like a thing that gets us back into the middle. You know, this is changing. It's not doing what it was doing before. Remember, I just said when when it did this before, it didn't do this. It went up. And if it doesn't do what it was doing before, that's a good sign. I'm sick of it doing what it's doing. We need to make sure that we see some sort of change. I think that the imbalance could be a time where some change could invite itself as well. We might be getting like a sneak peek of the way that it likes to move next week. I oftentimes see that in the minutia of the moves before an important event. And this is an important event because like the people with this giant agenda, do you not think they're like kind of getting ready for that? Oh yeah, they know everything about this and they're getting everything ready so that everyone's, you know, kind of like I explained it yesterday in the pen for the uh, imbalance. And it's funny that they don't want anybody to take control on the imbalance. They want to have control. You best believe, right? It's like, of course they do. Look at them go. You know, it's all the crazy moves they've been managing to do. It's all because they have that control, and it's incredible. And like I say, it's all about obtaining, maintaining, or retaining the control because they're going to try and take it from you. And if they don't keep making the market move the way that they dictate it should, then God forbid somebody else dictates it. That's an interesting move. There's no significance really to that time. You could say, in one of the most butchered attempts today, we've tried to make this left shoulder ahead, this right shoulder ahead, and this right shoulder. Taking that pattern and putting it aside, you can really start to see how it's managed to make a head and shoulders into an inverse head and shoulders in the most, as I said, butchered way possible. Because it has the left, the head, the high, the left, the head, the high. Now, it made this pattern, and it's like usually there's three extremes on either side. The middle one's the largest on both sides. But this one really throws that and puts it to test here, because there's a couple other moves in there that could be construed as the left shoulder, but it is intriguing how after all day of making it well, it's like it gets worse at being able to make it. Like it's worn out or something. Almost at that purple line yet again. Blue line slightly higher. Yeah, at one point at the dash line, sideways movement can come to an end. And in the sequence that it had down below, what it did out of the inverse head and shoulders, it took back. That was the purpose of the inverse head and shoulders, effectively, even with the huge breakout that we had, all of this, all of this, all of this, and that. When it broke out of the inverse head and shoulders, oh sorry, here, it took everything back to the point it broke out before leaving. And this is the point it broke out. I suppose you could say a controversial point where it demands a very particular thing if it is to do what it did before. I suppose so far it's trying to be similar. If it is a point at which it breaks this line here, then it's doing the same thing it was to this point. It's not to say that it has to, but it is something that definitely needs to be monitored. Like it could fail and then that's something new. And I'm like, well, then why the change? You don't have the same steam, I suppose. It's like you could say. First triangle to double down too. But is it ever a good attempt at trying to rekindle one of the most butchered head and shoulders to inverse head and shoulders there possibly is? And everything could be stale to the imbalance. You know, like I said with the pen yesterday, everybody's in the node. The node is like a containment area for everyone that wants movement. They get the node. And I'm like, well, it's true. I mean, like, it's very hard to get out of the node when you're in it now. You know, it's like, especially the people that are in for the red line, right? And that means the old high too. It's just been wicks and spikes past that old high. Like if we get down to the facts here, it really is true that not a single movement past that high, past that red line, has been anything but a move that comes back as quickly as it left. And every single time it leaves that red line, it comes back on the short term. Every time, doesn't matter where, you know? Even counting these little ones here, it's like they're just part of it because nothing is more than wicks and spikes past it. And that's interesting to me because that's the way the market's decided this should be. Has it spent this much time here as well? It's not going to be exactly the same amount of time, but roughly it has, so it could be expected to be finished soon, ironically. So is the day, but so can the pattern be as well. And I mean, it's true that this portion down here, right, it was doubled. Like it did take the gist of it and double it, like most of it. And you could see that it's quite similar in the terms of triangulation. The support line could even be used, but of course this top line is very particular. The support, that angle being, I could, you know, easily let it be the same. It looks like it's being treated the same way after all. It's true that B point was hit. Many of these are what would seem like insignificant. These levels are green zones and they stand by themselves because the next time we see them, we'll be falling to them. And they're not associated with any red zone, and that'll be apparent because there won't be any red zones above them. So we'll be seeing that, and it's not like those levels won't be seen again in the future. It'll pay to understand that they have been treated like that, because they are 188s that didn't get tested from. I mean, you could call that sure, but you know where their targets were. They're far lower. I think that they weren't really given full justice. In the future, it's likely that they can make a real, like if they go sideways and make it dump like really, really, really fast to that level, people will think the world's ending, and it's just like it's taking back most of this pop. Like it won't even be like, and then it goes through the high again. People won't think about it. It reminds me of that environment where every single day on the long term we were going up, 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 forming what looked like a rising wedge, and every day in the short term we would go up like this. We would go up like that. And that dump doesn't have to be for everyone during the day. It could be 2 o'clock in the morning, comes down to 6 o'clock in the morning, and everyone gets the rest of it, the grindy rest of it, the slow advance of the assets, call it. The gradual grind, the greedy grind on the other side of the fast fear. You know, because greed is gradual and fear is fast, as we've established before. People are like, get me out so fast, they don't even think twice. There's no room for retest. It goes down so hard. If you look at other really bearish environments, they call it a falling knife. Which is interesting that they wouldn't call the upwards moves throwing knives, because you would think knives aren't meant to be, they're not meant to fall. You could say they're meant to be thrown though, ironically. I guess you shouldn't, but you know, people do. I don't know. At the end of the day, the analogies, they could be reworked in my opinion completely. All of the different abbreviations, everything. All of the different sayings for things, the jargon. The support of the triangle undeniably is breaking, but not on any incredibly significant movement. I can see the volume since we've picked up in this last little bit right here. It is different here than it has been everywhere else here. This is different. People that have a lot of money are influencing these moves from what I can see. And you want to know what it's doing? Is a W into an M. And it's going to go and hit both of the B points in the middle. And be a little triangle in the short term. It's exactly what it's hitting this one right now. This underside right here. Very clear on the short term that it wants to be centralized. Now, what's not been centralized is the spikes out of the bottom. We haven't made them fair out of the top yet. Something we could be interested in doing prior to the imbalance, making everything, you know, back in the day before the institutions were really good at centralizing for the imbalance, what they did was they would stray away from the imbalance so that we could come back to it for the imbalance. We would stray away from the node so that we could come back to it for the imbalance. That's something we haven't seen for quite some time. I remember it like it was yesterday. A strategic method keeps it, you know, because it washes everybody out too. It's like, oh yeah, everybody wants exposure to the imbalance, right? And then you go smash, smash, smash. Who's still in? Oh, these guys got wiped out, and so did these ones. And now we're back in the middle. Hopefully you got your positions ready, and hopefully you didn't take it in this part, because everybody in here was wiped out. If they went short, then they had small window to take profit. Hopefully they took it. If they didn't, they were knocked out on the upside. Same thing in reverse. Common for triangles to work like that. Now the return back to the triangle from a relatively even portion, doesn't have to be incredibly similar. Yeah. Part of it. These are all preliminary moves to the imbalance, a report that gets released every day before the close, and at the open. But the most important one, like if I ever say the imbalance, I mean 3:50 p.m. Eastern, 2 minutes from now, where I draw this blue dash line. That blue dash line represents a time where volatility can increase, and we can sure, this is like dead zone, it's like a thing now. We do it all the time. And it comes into this point, it keeps everybody in a contained area so that they get kind of they don't really work, nothing anybody's doing is really working to get this out of the range. I think the institutions put selling pressure on the high and buying pressure on the low to keep everyone in the middle. And then we get this imbalance. And we rival the extremes of this node. Where, I mean, you could draw a range. Like, let's do it. Why not? A little red zone up there. We got a little green zone down here. It's not going to hurt anybody. Certainly is interested in the confines of that range. Now, of course, less than a minute remains for the imbalance. Everything's been made even. We've spiked out of both sides of the range just to come back to the middle. The imbalance. Interestingly enough, I think that by them moving the market, they keep the control, I think. And that seems to be what's going on right now, because these moves are kind of crappy, but they're from back and forth in this range. And this range, at its best, is 15 points. Which is not an enticing range for people to get involved with, and I think that's the point. They don't want people involved with it. Here's the imbalance. Very slow movement so far, could be delayed. But without everybody in the way anymore, I'm curious to see what the next move is. The imbalance can still have an impact minutes later. Of course, this is a tip of the triangle, regardless of the imbalance. So could that have an impact? Could we be interested in treating it as we would? Because in retrospect, what we're left with is the technical patterns. We're not left with the imbalance there. We're left with the fact of the matter is, this is how it treated the triangle at the time of the imbalance. That's the way I look at it. And there isn't going to be any triangle to test a minute from now. Very anticlimactic imbalance. I am saying that for sure. Definitely nothing special on that one. But maybe, after a moment or two after the imbalance, the general public loses their ability to unanimously work together to move the market based off of this report. The risk of the people really like holding the market back for the rest of the day is kind of minimal. It's like, I think that this imbalance time has caught the institutions off guard a couple times, and a lot of their work can be overlapped if they lose the control at a time like this. So if they're gonna do it, they better have a hedge. And I think that small consolidation in there provided enough liquidity off of all of these people trading in there to obtain whatever hedge there was for the weekend and the imbalance. At least it would make sense. How else do you think the institutions get their positions? They don't just find them up top of nothing. They get people to trade in them. They create opportunities that make people, try their hand at the market. And all those people that have been trying to get shorts and haven't been able to catch them, haven't been able to get them, have been stopped out. The institutions are going to keep all the shorts in this area over weekend. No, Sell them for a profit when the risk is averted and continue the assets upwards. Best play. No better play to do it than that way. And you best believe they're gonna push this machine even farther. And whenever it comes down, it'll be because they're making tons of money on it while they're waiting for that machine to continue. And they're gonna make it a really uncomfortable 11 low zone where everyone will fight and fight and fight, and they won't be able to catch the long. A lot of them won't, at least. We know what those environments are like, and I expect them in the future. The way around them is to hold through them and hedge against them. You know, make money on the bottoms of them. Don't try and catch the bottoms of them. You want to be profit taking on the bottoms of them, because if the market is going to move like this, where it makes a clear entry where you can find yourself a part of it, and it goes up a lot, the key is not to stare at the profit and loss, but to understand that it's going to make this move and you can be part of it while you're waiting. It takes more capital to do that, but that's the trade-off. And then when it does this move, you don't actually have to fight for it. Whereas many people will fight for this, then fight for this, then fight for this. And I mean, that one's undeniably the hardest one. It can take all day, that final reversal. And sometimes even longer. Like there was a 14-hour consolidation not too long ago. I remember talking about 5 minutes until the close though. Everybody contained still within the node. Not much movement, kind of stagnating in the middle of the range. The momentum indicators are kind of in the middle of the range. Stagnating. They seized the control. Nice movement on that. 454 end of candle. Watch the test of the high of the purple line as well. That's something that's been notorious for hitting, so like under no circumstances are stops safe above it in my opinion. An interesting way to put it. But now with the people pushed out of the way, do they continue the agenda? Unbelievable. I think any progress that's made beyond this point is undeniably coming back, but that's okay. It's funny to me though, because anybody that has a short, they put them under a lot of stress though, and they just want your short. Think about it. I told you they're holding all of it. They took these people's shorts because they need it. They need these people's shorts, and anybody that was short in here, they just stopped them out. Where do you think the position went? They kept it. The institutions stole the positions. They convince everybody to get a short trade in here and make it difficult by stealing it from you. It's kind of interesting. I best believe they're going to have a hedge for the weekend, and they're trying to find as much liquidity as they can up here. They're just grasping for as much liquidity as they possibly can, because their positions are so big that they could always use more on the hedge to protect the bottom line, especially if they're going to really take a break on the weekend this weekend. And I think that the more of a hedge that they have, the bigger of a break they can take. That's how they feel. We can either be with it or against it. But, it comes down to them working till the end of the day. They know most people won't. It comes down to this being a crucial time for them, where most people, they're long gone, They don't get to learn about these times of days. And it's like, I, I've always been the one to stay at the office at the end of the day and learn, and understand what the market's going to do, even when it's slow. Because I know that this whole environment came from slow and like, oh shoot, it went fast as it sped up. It got better at going up as it went higher. A thing that people don't believe it can do because they buy low and sell high. They sell high and buy low. And when it's high, you best believe they sold. And that sucked because if you sold, is that winning today? No, 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 no. It's not. It's not winning to sell today. You know that that's not been the case the entire day. It's not been to sell. Selling has not been the way. Only if you're holding long and you're hedging against, like really hasn't been beneficial. But to have sold any of the long has not been a good move. And now we can learn this, and hopefully it's not the hard way. But it is the human way if it's the hard way. And I mean, that's why I'm so descriptive. And I'm like, I know, people might like hate me for saying this, but I'm like, I feel like I feel like the hockey coach that told me everything I was doing wrong so that I could be better. And I'm like, well, I know I couldn't stand them. I look back, I have so much respect for them now, and I'm like, I knew I was doing something wrong. I didn't want to be that way, and I was better because of what they told me. And I knew it was hard for me to do what they told me. And I was like, geez, they took time, effort, everything. I didn't even want to go. I was like, geez, I was forced into it basically. And until I became good, I didn't enjoy it, and I had to listen to what they said until to become good. And I was like, oh man, it was a struggle. But I was a nerd. I didn't want to play hockey, but I was big, so they made me. But here's this final dump. I told you they were going for your short because a lot of people they went short in there. All that red in there. Yeah, it's interesting. It's hard, but these are lessons people don't get to learn because they quit too soon. And I mean, like, just like my, my hockey coach would say about those sports, it's like I I uh I I feel that it's tough, and everybody learns that this is what it takes to get what you want, and it pays well to get what you want. And the best way to go about it has been to do the playbook, which is be long and hedge against. And to this point, it's worked out really well. And there is a hedge that holds for the end of the day, and it's actually kind of juicy, so it's kind of interesting. Might see the green zone by the end of it, but it is at the tip of the triangle, having spiked out of both sides. We're at the POC, ending it right at the equilibrium for the end of the day. Just having come up and grabbed most of the people's shorts for the end of the day, returned right back to the point where most of them shorted it. It kind of pisses a lot of people off. It really does. Like, think about it. They're not happy with that. And it's kind of interesting. It's like milking it. And then we've got that notorious purple line that has been used so many times as like a barrier. It's a negative thing to make new lows off of it. But this is the closing bell, and we'll see more of the agenda next week. But thanks for joining, and hopefully you guys have a wonderful weekend, and I'll catch you guys later.
Thanks, man. Appreciate it.
Yeah, anytime.
Bye, guys.
Yeah, take her easy. Have a good one.
Take it easy.
Hi, thank you.
Yeah, anytime. Have a good one.
Thank you.
Yeah, see ya.